Good morning, everybody. Good morning, ladies and gentlemen, boys and girls. Welcome back. Alright, so first things first, the SPY has rolled over to what I would see as it's one of the first targets today. So right here, we're on the over-under support from the pre-market system. So a lot of times right here is a little bit of a long pop. If it gives up support right away, then obviously there's no long pop. Anyways, bottom line, blah, 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 blah. Looking at the 30-minute chart, market has the 30-minute over-under level right here. So again, generally speaking, that would be used as a pullback target. Once hit, a lot of times you get a little bit of a scalp long, can develop a better long. But again, that's kind of like the failure point as well. So just side note that most of the good key levels are usually over-unders, which basically means it's like the point where if you're above it, it's okay. If you fall below it, you can start to get more weakness. So this is really where anybody who's been long biased this morning from the last bottom would really like to maintain support, or you can see some downside kind of concept, right? So everybody who's been long this morning, so this move up, they're all probably stopped out at this point. Most people did not get the low. Most people, if anything, got somewhere in the middle of this candle. So as we roll it back down to here, we've probably stopped out most of that long already, right? So again, that's that over-under support right now. There's your long scalp pop as per usual. So yeah, and now it's just a matter of markets maintaining above or below for the moment. I haven't done a ton of research this morning so far, but that was a first go-to. And I guess there's not a whole lot of research that needs to be done for the moment, I would say. Mainly because the market is still in a buy signal. So until the market goes into a selling operation until the volatility index suggests that the market should be pulling back, then that just kind of hasn't happened quite yet. So yeah. So anyways, that's pretty much that for the moment. What else we got in here? Bitcoin. Bitcoin has rolled over into the daily targets. So this zone that you see on the chart, one second, let me clean this up a bit. All right, so like Bitcoin has rolled over into its daily sell targets. Now this is kind of ideally where the daily chart would like to hold some support. Anywhere in this zone is what they're going for. I don't really think it's going to work that great. I feel like it's going to break this time around, but since it's first attempt into here, naturally you're going to look for some sort of support action first before continuing to roll and break down. That's generally how that would work. So even Bitcoin this morning's coming into a little bit of support. I will show you that here, or not. I must have deleted it. 1 second. One second. All right, so we're not quite there, but you can basically see, right, if we take this last low, even I was even looking at this candle here as well. So taking this last low and this kind of boosts up right here. Excuse me. So taking this last low, this boosts up. Again, never is there a perfect system, but and also kind of, depends on how the market's, like what has it been doing? What does it look like? How far has it gone up? How far has it gone down? Is it a break? Like, there's so much that goes into it, but, bottom line, taking all that kind of what if and, throwing it out the window for a second, this would arguably be sort of a daily support area based off the daily chart and some volume weighted average prices. So, yeah, so a lot of times you'd basically be looking at like some bounces in here. And it's not that it's always going to work perfect, but yeah, you basically are looking for like support anywhere from, and I'll show you. It would basically would have been like support anywhere from like this yellow line on the top to this yellow line on the bottom, which I think we already bounced the first one, kind of. We got close, not quite, and we kind of shied it. Well, actually, yesterday, the yellow line or the support would actually been a little higher, and then as we rolled over again, it's kind of adjusted it down. So right now, the top side of the zone would be like 94,170. Yesterday, it was more like up here, but as the prices rolled, it's adjusted. But anyway, so this would have been kind of that first, kind of test into there. We kind of bounced here and here and just wasn't all that special. And then the next level would be down here. So, anywhere flirting, I mean, even above it, but anywhere flirting around there could arguably bounce a little bit. That being said, it's not my most favorite setup to use this approach on. I don't think it's going to work that great this time around for support, to be honest. But it's just something I would use. So, or another way of saying it too, just so you're kind of up to speed, is, right, see how we go up, market tops, then it bounces. Once this bounce came, I was already anchored here and looking for a retrace to this level, right? So it's not that, it's also support and you have to use it as support. You can use it as a back testable area. And part of the logic is that if the chart were to higher low, right, where would a higher low development location be? It would be right here. So, again, it's not even that you have to necessarily use it as a support. You can use it as a way to pull the chart back to then build the staircase up, okay? So again, that's kind of another way that we will look at this and use that, and that's the same thing that we just did this morning with the SPY before that pre-market bounce. So again, right? So top, pull back. Oh, sorry. Let me draw on this one more time. Top, pull back, bounce, track the volume up, pull back to, etc. So now if the market wants to hold a little bit of support in there, even in the short term, and prevent the market from just breaking down on Bitcoin, this is a decent spot for it to kind of try to chill out a little bit. Then there's a bunch of other levels that I would look at, but this is just the closest thing to price action right now. It's the most nearest. So that's the first thing we're going to interact with. But let's move back here to SPY real quick. Whoa. I want to do that. Wow. I hate when it does that. It's okay. Okay. So here's your breakdown. All right, so now we talked about you got to get below the over-under to break down. So this is where pre-market, the 30-minute chart has let go, right? And now we're just basically rolling down, all right? So we can take this back to even like a 30-minute here real quick. So this is, again, that over-under where all of the pre-market longs have effectively stopped out. They've lost their support, and that's that last sort of ditch effort for the long to stay intact, and if not, break down, right? That's kind of generally how that works, all right? And just as a, for those that weren't online yesterday, right? So if we go back to yesterday, all right, we're going to go back to yesterday real quick, and we're going to throw our anchors on, right? So where was the bottom of the market yesterday? Ready? So the bottom of the market yesterday was right here on this yellow line. Pretty much the same thing as our VWAPs. Ready? So market up, pull back to 30-minute trend support, market stays long, okay? This morning, market essentially puts in a bottom, right? Oh, actually, it started high, rolls lower, bounces, right? Market fails support right there. Okay, so the same tactic we used yesterday for identifying the bottom, again, it's the same tactic we use today to identify that pre-market pop, then that breakdown spot. So it's essentially just tracking the volume of the pre-market session and just knowing where a lot of the volume is concentrated at from the pre-market. That's pretty much all it is. The way that I kind of think about it, I call it the pre-market, what do I call it? pre-market. Yeah, I don't even know what I call it. I don't call it anything, I guess. I was just trying to sound cool. Well, I just call it the pre-market volume system. So, okay. So yeah, I mean, that's just pretty much it. Now we're actually, the funny thing is, you actually kind of reverse the process now. So now we're actually going to be looking from the top side down, low, high, here. Even drop this to a 15. All right. That'll need some time to really develop itself, but we'll even be setting some stuff up on the high now and looking for that as a back test now. See, now that the long has been kind of flipped there, we would now basically repeat that process just opposite, going from the top side and then looking downward. So counter longs will be back to the top down pre-market volume system for that matter. All right. That being said, let's pop here to the regular trading hours chart. So looking at the regular trading hours chart, market is still, I don't need that, don't need that, I don't need this, don't really need that for the moment, don't need these, don't need that, cuckoo, don't need that. Yeah, I mean, CVNA, yeah, I mean, I don't really. Again, I pay most attention just to the market these days. Some Bitcoin, some other cryptos. Again, I don't really look too far beyond with individual stocks these days. I mean, I could definitely take a peek at it, but again, it's like I don't follow it. I don't really watch it. I don't know their earnings. I don't know their revenue. You know. And now I could obviously just look at basic, simple technical analysis stuff, but you know, but I don't know like some others would know. I'm sure there's some other guy out there on the internet that's got a little bit more research on that than I would. Then again, I could do research on it, right? You know, it's like I could sit down and do it, but yeah, off the top of my head, I just don't know it. It's not good enough. So looking at the SPY too, again, just going back to the regular trading hours chart. This is again a chart without pre-market data. Pretty much it just says that the market's still in an uptrend. So like even if you look at like today's title of the stream, market or stock market today, market is in a buying operation, right? So the market's in a buying operation. You guys are going to come out of the stream, or someone on YouTube is going to look at the title and they're going to be like, what a dummy. The market was going down, you know, or at least in this moment it's going down. And they go, well, I thought you said it was in a buying operation. And, you know, that the thing is the buying operation is intact. So even if the market sold all the way down to here, it could go all the way down to, and when I say it could go, I mean, it just in the purpose of what we're talking about, right? The market can go all the way down to that little bullseye and still be in a buying operation, right? Well, further than that, actually. Hold on one second. Let me shrink this down a little bit. So yeah, I mean, market could actually go all the way down to here in that bullseye and still be in a buying operation, right? So yeah. So again, even if we're seeing some selling, it doesn't necessarily mean that the buying operation is failing, right? Now, that doesn't mean that in the short term you won't be looking bearish or things like that, right? So there's a difference between market being in a sell signal and market pulling back. All right, so like these here, right? So since here, the SPY, and I'm on the wrong time frame. Sorry, I need to be in a 30-minute. My apologies. I was like, something don't look right. And I was actually wrong. Well, that's true. The market could go all the way down to here. My apologies, guys. The market can go all the way down to where the bullseye is at here. I'm meant to be on a 30-minute and still be in a buying operation. Okay, so this is pullback. That's a pullback. This was a pullback. What we're seeing right now, arguably a pullback, but not actually in a selling operation. All right, so I will only flip that or consider a selling operation when we're actually in a selling operation there. Short-term sentiment, like on the 5-minute or the 1-minute. So there's a couple ways. There's a couple different ways I would consider, or there's a couple different ways I look at it. I guess you could say like each day, most of the time, right? So I would first start here, right? So we'll go to the 30-minute, and so we know that the 30-minute has been positive since here, okay? And so we would say like. In the reality is it's really a short term. Even though it doesn't feel short term, 30 minutes still short term. Now, if we look at the dates, though, now someone's not going to think this is short term. So it just kind of depends on how you think of things. But, like, if you look back here, this is the 21st, right? And we're into December the 3rd, right? Yeah, so from the 24th or so, 23rd, 25th to December 3rd, we've been in a buying operation. Market's been positive. We had, one bounce on the 50 and then positive, right? So we've been in a buying operation for a week, almost 2 weeks, right? So that's not really short term, but 2 weeks is still short term in regards to like years, okay? So it just depends on how you want to look at it. I call it like a midterm, but that just sounds weird saying that. So like medium scale time frame, it's like midterm, right? But, still short term. So anyways, we would start here, and this would be positive. And then we would just kind of dial back, and we go to something like this. So like here's the 15. The 15 still positive, right? If you go all the way to the 5 minute, for the most part, the 5 minute trend's still positive, right? 5 minute went into a downtrend. So basically 5 minute went uptrend here. 5 minute went downtrend here. 5 minute had some stupid over-under bullshit. Back to uptrend. One support test bounce. Short-term snap resulted in just the buy back up. So again, as you start to get to the smaller time frames, you'll have more, call them false moves, false crosses above and below, things like that. So the 5 minute just kind of flipped negative this morning, which tells me the 1 minute's going to be a little negative this morning. So you're currently on the negative side of the 1 and the 5 minute, right? Does that lead to continued selling and blah, 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 yada, yada, yada? That, again, that doesn't really dictate that. A 1 and a 5 minute won't dictate whether continued selling happens or not, really. But it at least tells you in the short term that if you were betting bearish, right, for one, you're not positive on the 1 and the 5 minute. So that could be seen as like a small bonus, right? But when we get down into, say, like a 1 minute, here, I don't really look at too much 1 minute stuff for pre-market, because it can be the volume's a little light a lot of times. So 1 and 5 minutes can kind of get toyed around a little bit with, so I'm not really crazy about those. Hold on, I have to look at something real quick that I think I'm forgetting. Well, that would be removed. That would be the last bounce of the 50 as of May. So it's going to be... So there was a test back in there. We're even still over the 1 minute sell trend or buy trend too, which would be all the way down into about 602.39. So these are some pretty, I mean, they're still short-term levels, but these are another kind of key over-under support I would be watching as well. So wonder if we get that today. That would be kind of interesting. Debatable. I need to look at some other stuff here. Let's see if hopefully this doesn't ruin the stream. I'm going to bring up some market internals. Yeah, so looking at the 1 and the 5, sorry, and I'll get to your question, but going back to the 5 minute and the 1 minute chart, in the pre-market, not too crazy about 1 and 5 minute charts. I mean, I am, but a lot of the stuff that I would look at would come off like a 30 minute or a 15 minute a lot of times in the pre-market. So like even now, like in this situation, the only thing I'd really be looking at like a 1 minute, not the only thing, it's not entirely true, but I would first be looking at that. So I'd be looking at this high trend down. So where we kind of top rolled over, smacked, right? I'd be looking at the 1 minute selling trend down. Even like this last leg be anchored here, right? And then if I really want to do 1 minute, I'd be anchored here. And so you can kind of see how we're developing those lower highs down by looking at each previous peak and then roll down. So yeah, so basically, like, if the 1 minute trend's going to continue staying bearish in the immediate, then you're basically looking for it to stay below here, right there, right? And this is all very micro stuff, you know, so again, not like I'm too crazy about it, like I said during the pre-market. So, and you can even see, like, very minusculely right here, we just kind of get, not that I don't even look at gaps on TradingView too. That's just like, nah. But anyways, you can see we pretty much just popped right over 603.31, and then we went straight to the next guy, arguably, blah, 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 blah. So that's one thing I would look at in the micro, is I would be looking at, like, 1 minute reset levels, 1 minute volume weighted average prices based off of previous market tops and cycles and things like that. So we basically know that as long as the market stays below that 1 minute volume weighted average price, then the 1 minute selling trend is in theory intact from that move down. But like I said before, we're really not even too focused on that. I'm really focused on this 15 minute all the way back up here. So at 604, that's a level I'm watching right now, and arguably as high as 604.05. Along with this down here, this is the other thing too. I'll put a little, what should we put in there? I don't even know what we would put in there. Maybe a bowl. So that's kind of another interesting level. Yeah, because it's the volume trend. Sorry, it's the volume trend of our last market buy, if that makes sense. Yeah. And then go, why the 50 SMA on the 30 minute? You know, the chart can probably just do a better job of explaining it than I can. Actually, give me 1 second. Sorry. Come on, come on. There it goes. Okay, yeah, so real quick, let me just bring up one of these other, yeah, I could just do that real quick, that's fine. So yeah, I mean, if we look at the 30 minute, I mean, again, there's really no perfect system. You kind of just have to kind of gravitate to what your eyes like. And this generally does a pretty good job at keeping my analysis and my thinking and bias, for the most part, on the right side of the trend. It's not going to make you first, but it's a good guideline and shift point. So again, it's not, again, you're not going to catch bottoms with this. You won't catch tops, right? That's a different strategy. That's more reversal trading. This is trend recognition, which again it's separate. That's separate from reversal and bottom. There's oversold and overbought metrics that you can use, and that would be more like that would be more like reversal trading, right? Or reversals. And this has nothing to do with that. Things can reverse, bottom, reverse, and not go into an uptrend and stay down, right? So you have to kind of, there's multiple different approaches, and I would say that, you know, it's not about picking a bottom or a top in this, what we're looking at, right? So when you ask, why is it the 30-minute chart, so on and so forth, when you look at this chart, you should be able to pretty decently visually see, like, uptrend start, uptrend chop, and then fail, and then back over trend, uptrend start, right? like this right here, this is when this system would really kind of, I don't want to say drive you crazy, but this is there's not very good clear trends. I mean, yes, you break down and you have a breakdown because you're below the 50 SMA, so market would be bearish. And like right here, you have a little pop that fails, and then you have a pop that fails, right? Pop and so there's ways to look for failure and all these things, but bottom line, it's just because at the end of the day, if we were to look at again this chart and kind of just zoom in a bit, this does a pretty good job at identifying again uptrend and downtrend start. So 50 SMA over is positive. Flirting, bounces, tests, gap down below. Market is bearish, down. Market, if over the 50 SMA, would be bullish. But in this instance, you have a downtrending 50 SMA, so that's another rule you have to add in there. So like that would be another one, ready? So like take this, for example, right here. Whoa. So take this example right here. So you see how the market breaks over the 50 SMA, so that would be, in the most simple terms, bullish? True, right? That would be. But also, look at your 50 SMA slope. Look at how negatively sloped that 50 SMA at the time of the market getting over it. So that would be the market getting over the 50 SMA, which can be seen as a bullish thing, and that's the market basically attempting to reverse that trend positive. But the moving average that's dictating the bullishness is sloping extremely negative. So you're essentially trying to push a market away from a negatively sloped average. That a lot of times isn't the easiest thing to do, or it wouldn't be your, grade A setup for transferring back to a long. If you want to go back to a long, you would arguably want this to be flat and or uptrending, right? Kind of similar back to like here, and so on and so forth. But so yeah, it just does a good job at identifying when the market shifts from, bearish to bullish and so on and so forth, right? So like right here, this was some chop, but the moving average was sloped down, and then it flattened out, and this pop actually went up, right? And then basically fell back down into a sell move that lasted until you got back over here, and then you went back long. So it's a good idea. It's a good way to kind of identify trends of the market, at least in the short term. And again, short term, most people think is like a 1 minute and a 5 minute, which is true. But I mean, this short term 30-minute 50 SMA also led to a buy signal on August 8th that lasted until August 22nd. Yeah. All right. So from the 8th to the 2nd, this short term SMA gave you a buy signal. All right. So it's short term, but, also swing related. So yeah, all that good stuff. All right, 1 second. Let me take a peek here. So yeah, Dean, I mean, different moving averages for different periods or longer periods can dictate, bigger things on the horizon. I mean, absolutely, right? So like if I look here, I would say like the daily chart's not even negative, right? So when I look at that, the daily chart's not negative. Here, the 4-hour chart's not negative. 3-hour chart's not negative. 2-hour, 1 hour. So we're not even negative the 30-minute, 15-minute. So there's that. But also, I will say this, when a longer term moving average does break down, so like, for example, let's just say the market was breaking down this 50 SMA. So like, go back to here. So we'll go back to like 2022 when we went into that bear market, right? So market was below the 50 SMA. So now you're getting these weekly lower highs and rolls. Upon each of these weekly rolls to the downside, they all had to start with at least a 30-minute sell move. So that's the other thing too, is like, even when the market gets to a longer term, say a longer term bearish trend and breaks down, within that bigger breakdown, all of those sell signals, for the most part, will still be activated in the short term around that 30-minute. So, it always kind of leads me back there first, in the sense that anything that, even relates to a short-term chart that you'd probably be focusing on for something like that, you still have to be below the 30-minute for the shorter-term market to sell bearish. So you could look at a chart, weekly's bearish, but the short term is still bouncing. And until the short term flips to the sell signal, that weekly bearishness won't really do anything. You still would need that short term to be activated bearish along with that longer term. So, and when we look at the chart right now, you don't have the SPY below a weekly time frame. So it's not a weekly sell market, daily sell market, 4 hour, 3, nothing really for the moment. But yeah. So there again, what you're looking at might be a little different than me. Not that it's not doesn't have value, but just the quick little run through I did there wouldn't say that we're bearish on really anything for the moment. Doesn't mean we can't pull back though. DJ, I mean, really, they're just different instruments for trading. Strategy is strategy, and the different instruments would have to play into your own strategy, I guess. So I can't really say that futures are better than options. Options are better than futures. They all kind of have their little things to them, I guess you could say. But yeah, I mean, they don't really dictate your strategy. Like at the end of the day, if the market's gonna bounce and it's gonna bounce, I mean. That has nothing to do necessarily with the future or the option. I mean, some of it does, but you know, if the market's going to bounce, it's going to do it for whatever reasons it wants to, which won't necessarily be because of a futures or an option. Now, if you get into gamma and all this, then you know that's a different story. But yeah. So let's get back to the SPY and back to this chart here. Sorry. Again, you know, we talked a little bit about the market popping back up. So the first initial thing you're going to be looking for most likely on this day is a long back to arguably, well, we didn't quite get there, but let's see, 603.82. That would have been that first initial desired long pop, and then back to, in this case, looks like a sell all the way up to there possibly. So again, market's still in a buy signal. We haven't been triggered. Again, we haven't triggered any volatility for the moment, which would, in this case, come over a 15-minute. Now, we do have a lot of interesting things to backtest on the VIX up to like 1386. So it's possible that maybe today we could get over the 15-minute SMA on the VIX. That could trigger some volatility, which would then be easier to backtest some things around 1386 and 1376 or so, maybe 1375 on the VIX. So right now, the key thing for the market, if we're going to see more of an aggressive pullback today, if we're going to get some sort of selling on the day, we would first want to see the volatility index start to get to trigger some volatility, which can only really happen once we get over 1363. And that's not even that it's going to trigger a bunch of volatility. It's just that would probably start telling the algorithms in the market, and they would start talking a little bit more with that being breached. Some of their equations will start triggering their if-then statements like, oh, 1363 has been breached. If this 50 SMA is breached, then this, etc. So we'd probably start creating some algorithm talk. So until we get over that, we're not going to really assume mega downside for anything. Not even a mega downside in general, just really selling for that matter. So our backtest levels on the day are still untagged, but like I said, you kind of have a rolling formation at this point. So remember how we're talking about now it's from top down, which basically means your backtest level is this yellow zone. So anything that first gets popped back into it might have some resistance and can roll it, but that's all very short-term stuff, and so on and so forth. Also, we're not even below the 30-minute pre-market level. That's kind of another key here. That doesn't seem right. Real quick, I will just add it too. And not every time will the levels tag perfectly, but this could change a little bit. But again, that's kind of the back test level to the upside here this morning. And it can change a little bit. Let's just make sure it's still relatively accurate. Yeah, it's actually a little lower here. We'll keep adjusting as need be. Oh yeah, forgot. Need to look at my market internals just to make sure that I'm not looking at, not missing something. Market internals, not the greatest for the day. Wouldn't really, well, I mean, not terrible either. Right now, the FANG are sitting sideways. The SPY issues are rolling down. Nothing's extremely bullish for the moment. But the FANG are still holding up, and they're a major player to the market. But yeah, right now, nothing's extremely bullish for the moment. But if this FANG and this NASDAQ 100 pick up, let's see, the Q should be doing okay. I would say the Qs are kind of sitting okay for the moment, and that's mainly because the FANG are still holding up okay. So if the FANG continue to perform on the day and the issues on the NASDAQ, or sorry, the SPY slow down, then that will help this market lead back up to the back test zone. Vice versa, if these FANG names end up kind of rolling shit in the bed, then this will kind of get damaged a little bit in the immediate. It's not the greatest setup we have here in the world today. Good morning. You're referring to... But the 180 days, 30-minute 10 SMA is about to cross the 50 SMA to the downside. Yeah, again, Dean, I guess I can't say for sure. Again, it's just not something I really pay attention to, I guess. So real quick, let's just double back over to Qs. Still holding up. Yeah, makes sense. I mean, so this is kind of what you're seeing, again, across the board here. 1 second. All right, so what we're seeing here this morning as we look in is really nothing's really all that bullish. Again, most things are selling to the downside except for the FANG names and the NASDAQ 100 for the moment. So that's generally not good for the market. Hence, you see how the market's rolling down here. Again, we shied our back test level. We couldn't even get up to there, right? And that can be like another sign of weakness, right? So you see how our little targets here, and we got real close to it, not quite. We missed it by, well, really probably about like 15 cents, maybe 10 cents or so. But either way, there's the pop to roll. And you can see the rolling formation. Okay. And the market internals are not suggesting. Also, you can kind of see we're starting to get some red print here on the FANG name. NASDAQ 100 is put in a red candle. So again, if those FANG names flip red, that's not going to help the market. Just an FYI. That's going to be bad for the market. This would be maybe not terrible, but you know. All right. Oh, stupid drawing. No. All right, so we got the VIX with the, you see how that little roll, see that little itty bitty roller mergoo? So with that little itty bitty, well, actually, let me bring it up again. So instead of just like looking at this randomly. So you see this roll. So we've had basically one candle roll down there, right? As a result, that's allowed the volatility index to come up to, again, that price we kept talking about 1363. So you see how we're back at 1363? So that little mini roll on the market has allowed the volatility index to increase to $13.63, which has effectively put that market onto the over-under that will then can dictate more short-term volatility increase. All right. So again, if we can get the volatility index over 1363, that can be a little bit of a trigger for more volatility. And then in that case, maybe we can start to bring the market down a little bit more. But we would most likely want to see / need to see volatility index over 1363 to keep this market rolling down. If we can't get over 1363, then I don't really have much faith in this dropping out the market a whole lot more. And the main reason being is just because we're not in a sell signal. So the market's not bearish. We're just on a pullback. But the pullback currently, with the way the VIX is set up, could start to trigger a little volatility. So if we get the right trigger on the volatility index, that could probably help us wiggle the market down some more. We'll see. So again, right now, if I could set the VIX on a 1-minute chart, that's what you're looking for. So you see how we've essentially, you can even see it. I mean, you can see it. I can just repeat myself a bajillion times, but yeah. So just a little shot up, boom, boom, 1363. Okay. So this market, but yeah, just really this market so far on the VIX going up to 1363 is the market increasing and backtesting a short-term SMA trend that can dictate increased volatility if broken out, right? So this little top you're seeing at 1363, it's not irrelevant today. It's actually extremely significant. I won't say extremely significant, but it's pretty significant or important for that matter. All right. So yeah, basically we'd like to see this 1363 breakout and then the sell move kind of continue. That would be a cool thing to happen. Don't get super excited though. Again, it's just a little bit of a precursor. And again, the market isn't set up in a way that I thought we would just drain out, but you never know. Crazy stuff happens. But that being said, too, let's double check. 30 Now, if we get are we really going to play clean like that 2 times in a row? That would be something. Wait a second. Yeah. We arguably, if we break out the 15-minute today, then the VIX probably has room up to, again, 1375, 1385 to 1390s. And then we'll just kind of basically pull the market back or stay more on the bear side of the market until basically the VIX gets into about 1370 something, 1380 something to even 1390. And then once we get to there, to around 1390 on the VIX, we're going to want to 1390 would be the market playing nice. So let's just hope the market plays nice today. We run it up to 1390. That way we can pull the market down more. And then we'll get the deciding factor of whether or not the volatility index wants to go into a long breakout at 1390 or if it wants to remain into a downtrend. If the volatility index wants to remain into a downtrend, we will look to bounce the market after the sell. If the market wants more sell, then we're going to need to start getting over 1390, 14, whether that be today or tomorrow or whenever the hell the market wants. But those are kind of the next sequence of events that we could foresee on the VIX. On that note, I will be right back. I think I've left you in a good place. I'm going to go refill my coffee. Where is this thing at? Be right back. Hello everybody, I am back. You know what, Dean? I mean, in the back of my head, it's probably just, again, when you're looking at a pre-market chart, the SMAs can calculate quicker than a regular trading hours chart. So you might be seeing like a little bit of a longer, that's 6-month SMA, maybe getting broken down on a pre-market scale. And that's just only because they calculate a little faster. All right, so again, real quick, just this is all the, I mean, this is the finite of algorithms and how they move. But again, you can see we have boosted up to the 15-minute chart. Here is the back test of that SMA. So if you look at a 1 minute, if you want to look at a 1 minute, right? So this would be, you know, if you're looking at a 1 minute, I mean, essentially this would be the market getting over the 15-minute for 3 minutes. And then here's your back test, etc. on the micro scale. And again, if the 15-minute can't sustain itself, then that pretty much will just put an end to that sell move, right? So that's what we're talking about. That before we even really consider any sort of, you know, big downside for the markets, for the SPY, that is, we minimum need to get the 15-minute into an uptrend. And also, side note too, when the volatility index is this low, you usually don't get aggressive sell moves, obviously. You need to get into a long move first. So kind of like back here, so on this day, which I was actually streaming on this day, but you'll see on this day we had the 15-minute trend break out and actually go for a long. So volatility increased on that day. Right now, volatility is just testing the 15-minute trend and so far rejecting it is what we're seeing, okay? Not really doing much with it. The market internals too, if you look, the FANG aren't really dropping out, so some of the big major market movers aren't performing in a way that should really just drop the market out, you know? So, it's another little side note too. Again, if we look at QQQ, this whole way up has been holding, and look how well QQQ is moving this morning, right? And that's because the FANG are performing pretty decent. So basically, what this is going to result in, it's going to end up resulting in like a long press if we fail this 15 minutes. So arguably, market will be setting up for a long press on the SPY with a 15-minute continuation and downtrend. So that's what you're kind of looking for, is some direction over under this 15-minute 50 SMA. If we fail this 15-minute, it's just going to be the 15-minute remaining in a downtrend, and this low press on the market gets bought up on the SPY. Granted, that would also mean we want to see some of the market internals here start to perform a little better. Like the SPY, probably going to want to see that start to turn positive. Same thing with the NASDAQ, or well, that would be the NYSE and so on and so forth. All right, so we'll see what goes on here. Right there, you can see the back test of the 15-minute 50 SMA so far confirming on like a 1-minute slight wick. It's nothing too crazy, but you can see how we've back tested, holding so far. Again, this is all that very micro stuff, but you get the point. Sip some of this coffee. Let's see, where is all this good stuff at? Okay, side note too, market is still below the 1-minute volume weighted average price from today's high of day. Again, that just tells us that in the micro, the bears still kind of have the control on the intraday volume trend. Again, real quick, just anchored to today's highs. That's the volume trend of the 1-minute sell move on the day. So far, the 15-minute holding up on the VIX. Again, it would be nice to see that VIX get boosted up even closer to that 13. What did I say, 1390? I think is what it was. 1395 would be pretty cool. Oh, yeah, that would be sweet. I mean, it's arguably got a setup for it. The setup is there. Funny, cool stuff. All right, let's press. Let's pop over. Let's see what's our friend Bitcoin doing. Oh, Bitcoin! What do you know? What happened? Does anybody know what happened to Bitcoin? For those of you that were on the stream this morning when we first tuned or first logged in, you'll know that we had talked about basically Bitcoin is in the support zone right now, with the top side of the zone being here, low side of the zone being here, and there's your boost up. Now, you and I, or we could all visualize support a little differently. Think about it a little differently, but normally it's like the first attempt. We just call it the first attempt. So generally speaking, when the market is first coming into a support zone or first testing a resistance zone, a lot of times that's where some of the better follow through can be at. So if we think about this zone being a support zone, whether it's the best support zone in the world or not a good support zone, whatever, as the market first comes into that zone, that's where support can be best. And when we say on the first attempt, that's arguably because, say it was amazing support and it just bounces and then just keeps going, right? Awesome. Say it's not good support, so that if it comes in and bounces and then fails, I mean, if you're in when it first comes in, then that's the best you could possibly do, right? So it's a kind of the concept being that even if they're bad supports or supports that are going to fail at some point, when the market comes into it on its first attempt, a lot of times that's where you'll get the knee-jerk reaction, even if it's not the best, and then later breaks down. There's still enough opportunity where you can get a little piece of the long, that even if it's not the be-all, end-all support, that you at least can find yourself getting in some of the action, so to speak. So anyways, that would be the first attempt into some daily VWAP levels that we have on Bitcoin, which we haven't really had the opportunity to do something like this in a while. So as far as the support goes. So yeah, anyway, so there's your daily VWAP support. We talked about that zone earlier this morning when you logged on to the stream. All right, so the VIX is up to almost 1375. So basically coming into one of the first long targets that we're thinking of on the VIX. Well, it's actually, like 1375, 1376. So again, that's one of the first long targets we're considering. Well, not really. The 15-minute would be the first. Then over the 15-minute volatility can be activated, which would then take you up to 1375. But either way, that's kind of pointless, I guess. But yeah, so again, there's about 1375. Next target up will be about 1385. And if the market plays really cool for us today, maybe we get up to about 1390s, 1395s. That would probably be best case scenario for the moment. I couldn't say more than that for now. I mean, even that may not happen, but as long as we're over the 15-minute trend, we do have to look up as high as 90s and some change. For the VIX, that is. The market internals on the day are still just basically nothing. Just basically meh. Again, all right. FANG names up, down, side. NASDAQ 100 up, down, side, NASDAQ down, SPY down, flat, sideways, and NYSE just down, volume just kind of lackluster down. So there's really not anything that's running super strong. Doesn't mean that can't change. Looks like we might be getting a little bit of a positive MAC turn on some SPY issues. I wonder if it has any bit of follow through. Whoa. Lackluster. Excuse me. And personally, I would say, as far as Bitcoin goes, I would say this last little support area and zone should really just be used as like a short-term bounce zone. I wouldn't say you should be loading up Bitcoin there by any means. It's more of just a short-term bounce zone. I would say, yeah, that's it. Just a short-term bounce zone. Nothing more, really. Looks like we're getting a little volatility up on some of the FANG names. Not a bunch, but at least one little candle kind of changing some direction there. Could add a little bit of a boost on the market. We'll see if it has any more follow through than that. But the volatility index got hit pretty good there. Like a little bit of a bearish candle, nothing too crazy. Again, just bringing it up real quick, if it ever work. 15 minute. All right, so you can see here's the 15-minute back test of trend. So again, this is kind of key here. Basically, if the market fails to hold the back test, then the market will kind of get boosted up. So you see how we just put in a pretty solid green candle there. You can, and I know it doesn't look like much, but again, you have one candle breach below the SMA there. Again, not a whole lot there, but interesting. Like I said, we're like right at the start. This is a 15-minute trend. It's the precursor a lot of times to some volatility. So this means you're a little early, but worth noting, because sometimes it can work better than other times. But again, the main one's the 30-minute. When you start flirting with the 15-minute, you're arguably getting close. And not arguably, but it just will be. And if we fail to hold the 15-minute, and the market gets bought up in a dip here, which basically would happen, right? If the 15-minute trend stays bearish, doesn't hold the breakout, and we boost up, we're still going to be targeting this bullseye, right? That's still where we're looking to take the market on sort of a long back test with a failed 15-minute trend. Why is this all stupid now? Let me just double check. Yeah. Yep, same stuff. All right, so you see, again, we did fail the 15-minute trend. So far, I mean, I know things can always change a little bit, but pretty much we failed that 15-minute trend breakout. See that? See how we went up, held it for a second or two, and then snapped right below? That's the failure of the 15-minute trend, at least for the moment, right? And you can see how the market's reacting so far, right? It's got a couple solid candles up. I know it's very minuscule. It doesn't look like a whole lot, but that is right there. You can see it. This is the break of the 15-minute. That's the micro back test. This is the 15-minute back test under, right? So again, just tells us for the moment that they and computers and algorithms, for whatever reason, unable to hold that 15-minute breakout for the moment. So we'll see if it gets recovered. If not, blah, 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 yada, yada, yada. You get the point. Also, look at the market internals here on the FANG. You can see the FANG I've put in, basically 3, 4, 4 or 5 solid green candles to the upside. The SPY issues are still lagging, still real lackluster. So a lot of this pop is basically built off the back of the FANG stocks. You're not really getting a whole lot of help from the SPY. So if we go look at the Qs, you should see the Qs have kind of breaking out. Yeah, you can see they're breaking out and kind of pushing up into a new high on the day. Versus you look at SPY, it's real lackluster on its push, and that's mainly because you have no participation amongst any of these other these markets. It's really just the FANG names. So it's kind of a shit pop in that regard, because you're not getting participation from a lot of the other markets you'd like to see. Oh, snap. Can you even hold up? There's a gap up there. And yeah. There are Yeah, there's still, I mean, we still even have targets back on the VIX up to 1490, 1550 and some change. Did they just put in a new? No way, they did. They could be setting the precedent, yeah, for another move back up on the VIX. And they just set in some targets for the market to go back to 1360s on the VIX. I mean, there's a lot of things that go back up on the VIX. Whether the market wants it today or not, we'll find out. But yeah, we got a lot of things that are setting up on the upside for the VIX. So it just basically tells us one day the market eventually top, and then the VIX will go up, and it'll go into volatility, and it'll go get these targets that we have. But the VIX is just basically setting the stage already for reversals on the VIX, for at least prices of 1380s to 1560s right now, at least on the chart that I'm looking at. It's funny. I mean, yeah, you can, again, still same thing here. FANG names moving really good on the day. S&P issues basically just terrible. Again, that's why we're real lackluster on the SPY here. But this is that's that scenario. So this is how you can read this, right? We know that the FANG names are the major market cap stocks. So as long as those are going up, you're going to probably prevent the market from going down, both the QQQ and the SPY. But since the SPY issues are not performing exceptionally well to the upside, it's preventing a clean run on the SPY. So there's two ways to look at it. Either it just remains lackluster like it's been, or the SPY issues eventually turn around and then give the SPY another boost, right? So that's kind of what we're looking at right now, is for arguably this SPY to you can already see the max turned a little positive, but it would be nice to kind of see some stair-step action on those issues, and it would help the market go up. And that's pretty much it. All right, so possibly Crazy B. I guess I wouldn't know for sure on that take. So we're pretty much coming into the long target there. Now, when I say long target, we haven't fully hit it, but we're arguably getting pretty close to it. Yeah, let me take that off. All right, so this would be that first desirable back test long target. I know we say a lot, but and the market isn't necessarily easy. Market always does what it wants and does its trickery here, there, and that, and the other. But I would say the main takeaway of all of this is from today is, again, we have this little bullseye, which is the back test long target. So it's the pop to short / back test long target. And as of recently, we use the 15-minute chart on the volatility index to dictate whether or not the volatility index was going to break out. If so, we would probably see the market continue down a little bit. If it failed to break out and 15-minute volatility failed to surge, then the market would most likely kind of get bought back up again. So you will see just a little bit ago, right, at 8:58, which was 10 minutes ago. 10 minutes ago, the volatility index failed the 15-minute trend. And then over the past 10, 15 minutes, you've seen the market go into a long. All right. So it doesn't look like much here on the chart, and it's not. It's really not much. But ultimately, again, 10 minutes ago, we had the failure of the 15-minute trend. And over the past 10 minutes, you've seen the market increase relatively close to that bullseye target zone. All right. that bullseye target zone is been derived since the time of 8:45 a.m. So the target that we're using to go back up to right now has come from the pre-market at 8:45, and over the past 10 to 15 minutes, which has helped kind of dictate that last press up, I think is built off the back of the 15-minute VIX volatility failure. Okay. Mind you, you see how we're kind of getting this red candle here? Not that that is anything crazy. It's just, again, unless the market on the SPY is over this zone, 60366 to 60377, the pre-market trend is still intact. Now, once we get through that, that can kind of cause a little bit more of a pop and all this and blah, 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 blah. But it's just basically a trend, right? So we know that right now, the trend that was created bearish in the pre-market, the last bearish trend created in the pre-market that topped it and sold it down here, that volume trend is the bullseye. So by coming back towards the bullseye, you can almost guarantee that anybody playing short is all squeezed out. They all got stopped out, most likely, right? So like, let's say if the trend just wants to stay bearish, right? From the pre-market, most people got taken out of their short by doing that. So by us effectively pushing the market back to the key volume zone, right, the trend can still stay bearish, but we probably took out most people that are trying to play short by doing that. All right. Now, if at any point today we do get the market back over this zone, then we will start really, I would say, like reversing the trend or really taking out any of the traders that were bearish from this morning. Around that level, that is. Let's see. MSTR is getting bought up a little bit. Does anybody know why MSTR might be going up? Why is Bitcoin going up? I don't understand. I just don't understand. Bitcoin, let's see, that'd be 94.5, 95.5. So Bitcoin's up a little bit more than $2,000 a coin since our suggested support level. Nice. I mean, come on, guys. Let's be real here. What is that? So, for example, let's look at MSTR. All right. Not that, again, we're just going to... Hold on one second. Oh, what is that? What? Wait. What is that? Gap Finder 1. Huh. I don't know what that is. Ha ha ha. All right, so for example, we know MSTR is, tied to Bitcoin, obviously, and its price action. It's not a one-to-one all the time, but let's look at MSTR. So MSTR today bottoms, 362, goes up to 390 something, right? Look at Bitcoin here on the right. You can see bottom and just pretty much straight up. All right, so the analysis you can start an analysis on Bitcoin and then use that for the MSTR markets as well. Just an FYI. And then also sometimes the MSTR actually front runs Bitcoin's price a bit. I've noticed it can go both ways. But the fact that it topped here, a lot of times you might see the top kind of come in a little bit later on Bitcoin. I've noticed things like that. But anyways, just a heads up, you can just basically use Bitcoin to do a little bit of timing on MSTR if you so choose. So remember, again, this is pretty much this would be daily VWAP support zone / daily higher low creation zone / attempt zone. Sometimes maybe can't spell, maybe good, sometimes maybe shit. Tasty. Real tasty. Speaking of, hold on. Sometimes they may be good, sometimes they may be shit. So, here's another interesting thing is for example, you could probably see this, right? So look at it, it depends on how you're looking at the chart, right? But if you were looking at this chart like this, you could have seen a head and shoulders formation. And then thought right here the market was breaking down the neckline, right? Which is true. If you're looking at that pattern, you would say there's a head and shoulders and the market's breaking down the neckline. Versus the way that I would have saw that chart is this is the daily support / higher low creation zone. So if someone was trading this head and shoulders pattern bearish, they'd basically be shorting the neckline breakdown right into the daily support level, right? Which is, I mean, I guess it just happens that way. I don't know, but that's another thing I'm seeing there. So definitely could have sucked some short sellers in based off of pattern right into a big long zone. And I don't want to say a big long zone, but in a long support zone over under. Now, I kind of felt like it, wouldn't hold as good as it should, but so far it's getting respected very well. And that's kind of the concept is once you're into a support zone, you just got to trust it. And if it ends up failing or not being that great, that's okay. Because, again, that will come around in the future. But, or being first attempt, right? That was kind of first attempt into that zone. Funny stuff. Good stuff. All right, let's pop back to the SPY. Did anything cool happen? Not really. Just pretty much doing the same old, same old. The VIX is not breaking out volatility right now, so again, we're not triggering, you know, crazy short or anything like that for the moment. Again, I mean, it's just the market internals aren't extremely bullish, so we're not just like, you know, ripping a huge long. The market internals on the NASDAQ have started to roll down, or at least, you know, pull back. So you're starting to see that rolling top a bit there on the QQQs. I mean, it's clear as day. Look at this pattern. I mean, literally, look at the Qs. All right, look at that, whatever formation that is. And then we'll bring this one full screen. And I'll look at the market internals. This is the FANG. So the FANG names versus the QQQ names. Or, well, QQQ, right? I mean, literally almost the exact same. I mean, of course, it's not perfect, but it's clear as day. All right, so you're starting to see your FANG roll over, so you're getting that QQQ roll, right? And now, as a result, you see it go down. And now, what are you getting on the SPY? Oh, there goes the SPY shitting the bed, right? Duh. All right, and with that little bit of a roll, now we're getting what? We're starting to maybe, oh, look at it shit the bed. All right, look at that dumper magoo, right? And we still haven't broken out volatility on the upside here. See how we're coming back? All right, so again, we're coming back to a potential breakout level on volatility. Though we just had a really big candle down, we still don't have an uptrend on volatility yet. I don't want to say we don't have an uptrend. We probably have like a 1 minute or a 5 minute maybe, but that 15 minute, we still don't really have much. What's that? Oh, that was Jolts? Wait. 10 a.m. Oh, that was a little bit ago. I was like, I thought we didn't even have anything at 10 a.m. today. But, whatever. And again, guys, this falls in line with, you know, pretty much the whole concept that unless you're above that target, then the pre-market bearish trend is still intact. Hence being the counter long level back to pop to sell. All right. All right. I mean, I don't want to say all right, but you can see here we're starting to get back a little positive on that 15 minute, and it doesn't always work as like a perfect 1-to-1. Sometimes it can play nice, and sometimes it can be annoying, but we're starting to get that kind of early vibe that the market's trying to put in maybe some volatility, right? You can kind of see we popped earlier, broke back below it, now back above it. So we're starting the flirting game with the SMA trend. So we do, again, have the market on the VIX. Whoa, that's weird. I didn't even know you could do that. Huh. No way. Anyways, yeah, so we do got the volatility index kind of back flirting with the 50 SMA. Again, it's not necessarily supposed to be a 1-to-1, but basically volatility is now back into a 15-minute uptrend. We've even put in a higher low now. So again, you can kind of see from this run, we have a nice higher low. Now getting back over 15-minute trend. We'll see if it amounts to much. $10.23. What is it, Tuesday? Yeah. Wait, or is it Wednesday? Am I tripping? No, it's Tuesday. That's funny. Always the exact set, just at about 30 people there. Did you answer my question about the VIX? Oh, I might have missed it. Oh, I did miss that. Huh. Yeah, so the volatility index is it can be interpreted a couple different ways. Well, people normally interpret it a couple different ways, but yeah, so volatility is just the volatility index is just a gauge for implied volatility. It is the implied. It's not a gauge. It is the implied volatility of the market. So I believe it's the 30 days, 30-day expiration on the, or it might be, oh, I learned this once before. It's been a while. But basically, the volatility index, it's the implied volatility of the S&P 500 options. I forget how long they date them out to in that calculation. I think it's the 30-day expected. Yeah, I think it's the 30-day expiry on the options. Let me double check that. Hold on one second. Yeah, I want to say it correct. I don't want to be wrong on this. I remember. I can't remember if it's 30 days. I think it's the 30 days. Yeah, forward-looking volatility. Yep. All right, so I'll give you the more correct answer as far as how they calculate. So volatility, and I'm using ChatGPT for this. It's smarter than I am, right? But measures the market's expectation for the 30-day forward-looking volatility, and it's calculated using the option prices for the S&P 500 index. So again, it's the 30-day expected volatility. Input data. Let's see. Near the market cost, right? Yeah, so they use the two closest expiration dates from the month and the next month are considered, and basically has to be more than 23 days until expiry. So yeah, it's trying to give you the implied volatility based off of 30 days of expiring of the options that expire in 30 days. But anyways, you know, so the less academic response to that would basically be it's the implied volatility of the market. So the higher the VIX is, the more volatile the market, the bigger the range of the market is. The lower the VIX is, the less volatility there is in the market, the less of a range there is. So you guys see how the market's starting to go down now? I don't want to say starting to go down now, but it already had that big drop, and now it's kind of rolling, and things are going down. And what do you know? We have broken out the 15-minute volatility trend, and then the market goes down. It kind of went down before that, but there's your breakout of the 15-minute trend. Again, that 15-minute trend's at 1361. You see, I know it doesn't really look like much. If we look at a chart, there's really, I mean, it doesn't look like a whole lot. It's literally just a line on a chart. But algorithms are watching these things. Things are thinking of these things. I'm thinking of them with the massive 30 viewers, the massive same 30 viewers every single day. But anyway, so there's a little, again, that's that break of that 15-minute trend. That's an early precursor to volatility. And as a result, you can see we've had another market rollover. Now, is that anything massive? No. Could it lead to something bigger? Maybe. But right now, what we're seeing is we're seeing 15-minute volatility triggers, which are not the be-all, end-all, but they're early precursors, right? So if we want to see bigger volatility in the market, then we're going to need to see the VIX over the 30-minute trend. So right now, here's the 30-minute. The 30-minute, and this will continue answering the question for you. There might be some news and I'm missing. I don't know. I really hardly look at news. I just pay attention to charts half the time. But yeah, go. So as far as the VIX, right? So what you just saw, so let's look at the 15-minute here. Disregard all of the lines on the chart. Just look at the SMA level. Right? So if you look at the SMA level, right? That's the 15-minute right here. So as the market starts to peak over that, it's the volatility market. The volatility market is starting to breach certain things that can suggest volatility will increase. Okay? That's one level. The next one here is I meant to go So the 30-minute, right? The next one here would be the 30-minute, right? So here's the 30-minute trend. 30-minute trend's negative. When the market gets over the 30-minute trend, volatility many times can really pick up. So let's look at a 90-day chart here. So ready, watch this. So if you were to ask me like, oh, when is volatility going to pick up? Like, let's say we were back here, right? Let's say we're back here on this day and you go, when's volatility going to pick up? I would say when the market gets over the 30-minute or the 15-minute. Both of them, right? So right where this arrow's at is where the volatility index breaks the 30-minute. You get a pop, and the next day you get a gap up and follow through. And then eventually breaks down, blah, 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 blah. And then I would say volatility back here, I would go, hey, volatility just broke out, or it's trying to break out. And then there's your move. So on this day, back on, I don't know, whatever day that was, we would say, hey guys, just like if we were on the stream, hey guys, volatility is starting to break out the 30-minute. This is where the 30-minute can start to, you'll see volatility increase, and as a result, you'd be more likely to see markets pull back, right? So now fast forward to where we're at, right? And the market has been downtrending on volatility. We haven't yet broken out, but that would arguably be what's coming next. After you go from a downtrend and you change direction, you go to uptrend. When that occurs, when that exact moment is, all unknowable. But what we do know is when you go from a downtrend, the next thing to do is go into an uptrend. It's inevitable. It's eventually going to happen. And as we start to shift that 30-minute trend, a lot of times that's where we'll really start to increase volatility. What we're seeing right now is the little brother of the 30-minute. We'll call the 15-minute the little brother. Right now, little brother has just started waking up. Usually if the little brother gets out of bed first, he'll go over and start poking his big brother. And once the big brother gets out of bed, then stuff really starts kicking off. So right now, the little brother's starting to wake up. And if he's strong enough to get his other brother out of bed, then volatility will really take off. So we're starting to see the early formations of potential volatility increase. And as a result, what are you seeing? The market is maybe a little more fearful. I mean, this is kind of, I mean, look at the chart, right? Did we not just drop? Are you not seeing a rolling over kind of formation? You are. And it makes perfect sense because the little brother today on volatility is starting to create an uptrend, right? So you're getting a little uptrend on volatility, and now you're starting to see a little rollover on the market. It's not a be-all, end-all, holy shit, the market's tanking, because there's really no need for that. Why should the market be rolling over and just falling apart if there's no selling operation on the market and there is no confirmed buying operation on the volatility index yet? There isn't. All we know is there's one little brother of volatility starting to wake up and create a little ruckus. All right? Now, there could be something in the news. I don't know, right? The news, if you ask me, is a lot of times perfectly programmed and timed, and they release it when they want to release it. See, what I would expect is, like, if the volatility index breaks out the 30-minute chart, right, in the next couple days, I would expect somewhere before and on that day, there's going to be some news announcement, whether it be something inflation or, I don't know, a new Trump scandal, or Netanyahu sends a couple bombs this way, or Russia does this, or nuclear that, or whatever they want to bring down the pipeline. I would be more willing that we'd see that in a couple days when the volatility breaks out, if it does, right? Exactly as Easy Win just said there. Like, it's not non-farm payroll tomorrow, so they'll just use that to manipulate the market, and that's entirely correct. They will just use whatever news that they can in the moment to give reason to run markets the way they want to run markets, right? So yeah. So that's kind of that. That was kind of a little bit of a rant, a little bit of a spiel. I apologize. But yeah, so to answer your question on the VIX, That's what it is. The VIX is the implied volatility of the market. It's derived from the options markets, looking at expirations that are 30 days out to no less than 23 days out from expiry. That's how they derive the implied volatility of the market. When the implied volatility of the market is lower, like we're seeing now in the 13s or 14s, you usually don't have as aggressive downswinging and reversal rallies as opposed to when it's 18, 19, 20. And you can get an idea for when things will go from a low volatile market to a high volatile market based off of, is the volatility market uptrending or downtrending? Because if it's uptrending, it should be going up, thus volatility increasing up. And if in downtrend, it would be decreasing down. Yes, you say VIX is going up means right now market going down. So I assume that it's some sort of short-term top signals. Is that right? Debatably, I guess. Yeah, so just because you're seeing the volatility index going up doesn't mean the market has to go down in a one-to-one manner, right? By any means, no. And that's another thing, too, is a lot of people that I would say just are using the VIX, too, or just in general have an idea that if the VIX is going up, the market has to be going down, and that's not true. Or just because the VIX is going down, the market has to be going up, and that's not true. I would say more oftentimes than not, that's kind of the case, but it's not a one-to-one relationship. And the best example was, the best example I have of this was, I forget exactly what it was, but it was, I'll show it to you. I think it was this. Wait, or was it that? No, it wasn't that one. Wasn't it that one? I don't remember. Or was it that? Oh man, it's so hard to say. I think it was this. It's hard to say though. I don't know. I kind of forget what it was. It wasn't before the election, was it? Or some, I don't know. It's been so long. Can't remember. I want to say it was this. But yeah, so it might have been this. I kind of forget. But it was a scenario where the volatility index was... No, it can't be that because it was holding above trend for much longer than that. I think it was this. Yeah, I can't say for sure. I feel like it was this. But anyways, there'll be scenarios, it might have been like this one, where the volatility index was just like up and up and up and up and up. Like basically just like up, the market was not selling off, so it's like, what's going on there? And then eventually, as soon as it went into a selling operation, the market just pumped. So that was a situation, it wasn't too long off, where the volatility index was really high, looking like there was going to be a big market pullback, and the market just shrugged it off. And as soon as the volatility index went back into a downtrend, the market just pumped. So basically, everyone that was being bearish the market ended up getting pushed out because the volatility index was lying, essentially. Again, looking over here at the market internals. Again, the FANG name got picked up pretty quick there. S&P issues pretty much flat. I mean, most things are basically down, flat, while the FANG names are pretty much running the markets right now. Bitcoin, I don't know. What is it doing? 95,008 something. Let's see. Oh boy. Take that guy. Yeah, I mean, it's kind of awkward. Could have missed something here. Probably did. I was talking to, yep. Yeah, a little bit. I mean, it's not a big deal, but yeah, I mean, we're also coming into, again, the 1 minute trend support of our last buy move. So it's kind of like a support area, which it kind of already got used as one. It's, yeah, but it's just, yep. Nothing I wouldn't concern yourself about too much. Again, you can see right here, we got the VIX Volatility Index, right? So it broke back out the 15-minute, and this is the back test of that 15-minute. So if I bring it up, you'll basically just see it's moving around that 50 SMA. Break over, back test, under, break over, back test, right? And, you know, if you go look at a 1 minute, and there you have it right there. So a lot of this is algorithm and stuff like that. So, you know, this isn't necessarily your average Joe retail trader looking at a chart. You know, this is a lot of high frequency trading in computers and algorithm. And I wouldn't even really say that in relationship to this volatility index, but you get the point. OPTT. I don't know. It sounds like you're probably asking about some random penny stocks, which I usually don't mess around with these days. I think that's what CRKN. Yeah, nah. I mean, not that it's just nah. I mean, it could totally do whatever. It can totally do sweet things, but really, really, this is what ends up happening with pretty much every single penny stock. Let's see. As long as it hasn't been, it's got to be a relatively new listing. Yeah, I mean, this is, I wouldn't say it's relatively new. It's been out for it's been out for a lot of years. 2021. It eventually went pumped to 32, now down. So it's got a lot of bag holders and things like that. So it's not a newly issued stock. OPTT, kind of the same scenario. Not that these things can't change, but again, this is from, you know, 2000. Shit. Holy cow, it just keeps going. Yeah. So, yeah, I don't even know. This goes all the way back to 2007. Multiple reverse splits. Not a newly issued stock. So a lot of overhead bags of retail investors. So, yeah. So here's another thing too, just to keep in mind when it comes to penny stocks. There's nothing wrong with it. It's just kind of the natural, just the order of how things operate there. But so yeah, I mean, if a company wants to be publicly traded, right? If a company wants to be publicly traded, the company is going to file to become a publicly traded company and go through that process. And if all goes well, they're going to essentially partner up with a broker dealer, someone like, for example, Fidelity or Charles Schwab or whoever, right? To sponsor the shares and offer the shares. And so once a company becomes publicly traded, a lot of times it's going to be the broker dealer who then has the shares, and then the IPO the shares, right? So I start my new coffee mug company and I go, I want to be publicly listed and I'm going to offer 10 million shares. So I offer 10 million shares, broker dealer sponsors it, they pay me up front, so I get all the funding, and then I give them 10 million shares, and they're going to IPO the stock, and upon IPO they're going to try and distribute and sell those shares to the public, initial public offering. If the broker dealer can't basically offload the shares to the public, right, or for whatever reason, blah, 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 then the broker dealer ends up with the shares. Now, if this new publicly traded company that just sells coffee mugs becomes, a shit penny stock, then it just goes down. And eventually the broker dealer is going to want to offload his shares of this publicly traded IPO that he sponsored a couple years back that isn't really doing anything. So essentially, anytime we list, publicly traded company, a lot of those, if not all of those shares, are going to be coming specifically from the broker dealer after the funding is given to the company. And again, if the broker dealer doesn't distribute the shares, then they hold the shares. All right. So a lot of times a penny stock, a lot of those shares are going to be owned by broker dealers and so on and so forth. So as that thing goes down, 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 it's in the broker dealer's best interest to pump that stock. Or, let me rephrase, it's in the best interest of that stock to pump at some point and get public interest back into that stock and then retail buying it, at which point the broker dealer can offload shares. All right. So a lot of times, publicly traded companies, IPOs, that, whatever. Let's just like the one you just gave me. I think it was IPA. Something like this, right? So let's we'll go to a monthly chart here. So we'll just do like this. Where's the price? There it is. So basically, we'll just say, I don't know, right? But like this goes all the way back to 2001, whatever. Broker dealer selling shares, pops up, sell a bunch of shares. I mean, it's probably not the greatest example. Oh, LPA. Let's see, LPA. I don't know. This kind of looks like it may have done it already. Let's see, daily chart. Yeah. I have no idea what, why, or who, here, there, or that, or the other. But see, this was one where, again, it was a brand new listing, all right? Explodes. Now there's a bunch of bag holders, right? But this was one where it was recently issued. You don't have a lot of overhead resistance in the sense of bag holders. And it appears there isn't already a naked short put on the stock by the industry. But this is kind of a situation where, again, it was recently IPO'd. It looks like in the year of this year, 2024. Yeah, so it's recently issued, hadn't really gone through an aggressive pump, so didn't get the chance to suck in enough retail and create bags and overhead resistance in that regard. So if you're looking for pumps and things like that, a lot of times you want to look towards like newly issued equity onto the market. And let me kind of explain why too. So again, if there's newly issued equity onto the market, generally speaking, the public doesn't own it, right? And a lot of times the broker dealers do, because again, they're going to be the ones sponsoring or, facilitating the deal for a new company to raise equity, right? I want to sell my coffee mug, so I publicly list my company, and a broker dealer sponsors the shares, provides the funding, and then they IPO the stock for me because they're a broker dealer. They're legally allowed to sell securities, so they sell the securities on the public market and offload those shares. So it's really it's in the best interest of, you know, stocks to pump, in which I was like, you know, if I'm selling a bunch of securities, right, and I paid this guy, gave him a bunch of money for his company, and then he gives me 10 million shares, and then I go publicly advertise them on the market and sell those securities, I would love for them to pump, right? The last thing I would really want is for them to do shit and then just go downtrending, and here I am as a broker dealer just sitting on a big old bag of shares that are worthless. And in the event that does come true, I would really hope someone like Benzinga walks around and starts pumping that stock so that I can offload those shares. Again, I can't. It's not what's the best IPO to buy into the market. That's kind of not the point here. The point being is if you're looking for stocks to pump, especially, or stocks that pump, or stocks that are going to pump, a lot of times you're looking for stocks that are newly issued equities to the market that don't have a naked short on them, and that have not already gone through a pump. And the reason I say that is because if they haven't already gone through a pump, you don't have retail bag holders, and the broker dealer, kind of the game and the system, may be still looking to pump the stock to offload shares. All right. So again, let's just say, like, again, I started up the coffee mug company just this year. Stock's been doing pretty poorly, hasn't really done much. There's no interest in the stock. I'm the broker dealer. I got 25 million shares. That's where I'm really hoping Benzinga or MarketWatch or Finviz start creating articles on this stock. And then all of a sudden it's like, oh, it's getting FDA approval. And then it pumps up and now I can offload, right? So a lot of times newly issued stocks can be a little bit more susceptible to going through pumps because A, they haven't already been pumped by the industry, and there's no retail bag holders. And also, it's entire. I forget exactly the lingo here, but it's entirely legal for broker dealers to communicate with different financial news networks to release positive news. It's literally like totally legal for them to do that. Again, as long as they make filings and do it in time and all that, like it gets all legal. But again, like as me as a broker dealer, I can literally go out there and be like, oh yeah, you know, talk to my financial news networks and all of this and blah, 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 blah. And then we're going to release this news in the stock and hopefully it creates buzz, right? So like literally the same people that are offering shares are also allowed to be in contact with financial news networks and basically release news in order to create buzz for the stock. I mean, that's literally their job, right? Like as the broker dealer providing shares to the market, right? We want to get the company out there. So like literally that's totally legal. So again, it's the game. So it's interesting. But anyways. All right, so yeah, that's I mean, we're about 1052. 1052. Markets are pretty much just meh. No surprise. I mean, I gotta say it's been a really good stream so far this day. I gotta say, it's been a pretty spectacular stream. So, I guess really just out of curiosity, what have you guys thought of the stream the past past week or so that I've been on. Do you guys enjoy it? Does it help you? Do I help you navigate the market a little bit better? You're learning things that are valuable, do you think are worthwhile? What's the feedback looking like? Or is it just terrible and I should just never stream again? Which, you know, kind of surprised I'm even allowed to stream right now. Can I stream Call of Duty on the side? I probably could, to be honest. You know, Mike, I guess that's a question I really do not know personally. Yeah, it's something I don't personally know. Alright, so again, real quick, just a side note, I just want to show you guys this. So right now, we're on the 1 minute volume weighted average price retrace level for the last rally on Bitcoin. So again, if we take Bitcoin into, so again, this is like, so we took daily support. So this low down here, this was daily. So we took a daily support, bounced it, rallied it out, then retraced it to the 1 minute support trend off low. So we took a daily support, rallied it. Now we're looking at a 1 minute trend support right there. So this is the first 1 minute trend support bounce attempt for the last rally. Okay. So this is a 1 minute strategy here, coming off of a daily chart strategy. After that 1 minute will be the 5 minute, which we kind of got close, not quite, but here's the 5 minute. So now it's the 5 minute, which basically means the price, and you can see the price of the 5 minute is below the 1 minute, clearly, right? If I kind of flip, and it's not that there's a big difference, but if I flip this real quick, Also, you will see currently the volatility index is broken back down that 50 SMA. Therefore, the market's kind of bottoming right now. So again, your short probably isn't going to work amazing because the VIX is breaking down a little bit and so on and so forth. But anyways, so the 1 minute is right here, right? And so the reason I say right now we're on the 1 minute, the next will be on the 5 minute is because at some point, whatever, Bitcoin breaks down the 1 minute, it's obviously gonna, if it goes down, then the next thing down would be the 5 minute, right? So again, the next level that you'll be looking at is the 5 minute. So right now the market is doing the 1 minute back test, long pop. Now, if the 1 minute fails and goes down, then the next level of micro support trend would arguably be not perfect, but somewhere into the 5 minutes where you kind of look next, right? And if the 5 minute failed, then we transition into the 15. And the 15 minute's going to be all the way down here. So if you look, just that 1 minute trend on Bitcoin had created that's 95,380 to 95,726, 387. That's like a 300 point bounce or something like that. Or $300 bounce. So that 1 minute trend created a $300 price movement so far. Right, and so if you take out the 5 minute, then it goes to 15, then 15 goes to 30, 30 goes to 1, et cetera, et cetera, et cetera. Right, and these are kind of the micro terms on the way down. Right, so as this is coming down and going down, I'm like, yeah, I kind of expect there might be a little bounce here or something around this area because it's the 1 minute trend. Right, so, you know, keep that in mind. Where's the market going? I have no idea at this point. Or, well, the market's probably bouncing for the moment. That's pretty much it. Yeah. Where's the market going? See, I love those questions. Where's the market going? It's because, like, all day we've talked about where it's going and predicted many places it would go and things it would do. And we do it quite often. So again, market's going up because again, we're breaking down that VIX. So again, a lot of what we were doing today, guys, is we were looking around the VIX. So let's pop this onto this time frame here. So you see how the 15-minute trend has failed, and as a result, what are you seeing? You're seeing the VIX, or not the VIX, but the SPY get bought up. So that's why I would say we're kind of bottoming right now, and that's because we're using the VIX trend failure to bounce the market. And arguably, we're using the 1 minute 50 SMA support level created back from here. So like right here, again. So again, we're still holding trend support from the buy signal bottom a couple days back. But yeah, where's the market going? In the short term, just there, market bounce because 15-minute VIX failure. Where is it going to go? Again, I have no idea. Really don't know. I mean, it's going to go up until it goes down, I guess. Because we're not into a sell signal. But that's kind of it. It's better for me to kind of answer your question maybe a day when we're getting a buy signal or a sell signal, because then I could kind of tell you, hey, market's into a buy signal and a versus sell signal. Right now we're in a buy signal, but we've been in a buy signal for quite some time. So the long has already started from maybe a week and a half ago. So we're late in the sense of the start point of the buy signal, but we're still in one. So you shouldn't really be extremely bearish the market right now. Not yet, at least. But we could be transitioning soon. Also, side note, our counter trend can say probably, I mean, still our counter trend target hasn't even been hit, which just basically means it's still kind of like an active level. We gotten real close. I mean, it basically did hit. We got real close, but I mean, like a true live tag of these levels hasn't really been hit yet. So it just tells me when we reverse it, that's still going to be just that same level. And so that's another thing too. You can see since this morning how much I've adjusted that target. You know, it was higher in the morning and now it's gotten lower and lower and lower. So like that's another thing too, is a lot of times, a lot of the things that we look for targets, or whether it be support, resistance, backtest levels, things like this, they're continuously updating as markets move. So that's another reason why I think maybe some of the stuff we look at works a little bit better than maybe some other things. That's because we don't look at the market as a static, horizontal playing field. It's an ever-evolving, changing environment. So a lot of our approaches will be moving in relationship with that. Still, the pre-market trend is still intact as far as that bearish kind of motion. So, you know, like I said, well, there's a lot of things that I've said, but you know, to me, it's like kind of like riding a bike now, because I've done it so many times and I've repeated these things so many times. So all the rules are just like always there in the back of my head. There's no way that I could write them all down and put them all down and even put them on a screen for you to rationalize at every go of it, or every step of the way. But yeah, I mean, you know, I wish I could. So what's going on with our friend Bitcoin here? What is it doing? Oh man, you guys really, you gotta stop taking my suggestions on the stream and taking them so literal. Look what you guys just did. Why'd you do that? Why did you guys just boost out Bitcoin off a 1 minute support level? Like I said, that's a terrible idea. You're not supposed to do that. You know, just helping people predict the bottom of a Bitcoin market that's $95,000 and telling them the support it will be within, you know, only like 20, 50 bucks. It's not bad, right? Or just taking this last sell off where I'm sure everyone was just panicking and then putting a little alien face and telling you it's a support and then rallying it out $3,000 a coin. I mean, you're not supposed to do that. You're supposed to be an idiot. All right, so is there anything good happening in the world? No, actually, probably not. There never really is, it seems. I'm sure there's just still a bunch of people bombing a bunch of people everywhere right now because beats me. I guess the world isn't already a good enough place. Temperature is relatively perfect. I mean, it's kind of amazing when you think about it. Some delicious food you can be eating. You know, you could be putting an alien emoji on your stock chart, but we still need to be bombing and killing people. I just don't get it. I really just don't. It's because I'm not supposed to get it. That's why. You dummy. You're just a little peasant. I'm not supposed to know those things. So yeah, anyways, we just did the little 1 minute bouncer Magooster McGee on the old Bitcoin. I like that. So yeah, again, there's really, like I said, there's not a whole lot to say here today. Where is this at? Hold on, this is kind of I forgot to check this today, but let's see. So it's open, close. I should do this a little more accurate. Oh, that does not look right. Something is not right. YouTube, if you want to let more people see the stream, that's okay. You don't have to just cap it at 30 people. Okay, don't worry. You know, we're not here trying to start wars. What is wrong with me? I don't know what I'm doing wrong here. Ah, yeah, there we go. That makes more sense. I mean, that's close enough, right? Yeah. Needs more rocket emojis. Yeah, I mean, what are we doing? I don't know what we're doing. What are we doing? What are we doing, folks? Yeah, I don't know. Like I said, I'm just kind of sitting here. I've already done pretty much, I don't want to say I've already done everything I could have done, because there's always something that's eventually going to change, but let's see. SPX has gotten down. Hasn't even, I'm going to say, I mean, obviously, you know, that just sounded totally stupid. This was a kind of a real small gap today. It wasn't really an efficient gap, I wouldn't say, but TZUP, I have no idea. But let's take a little look-ski. So, I don't know for sure. Let's see, well, how far back does this thing go? Huh. So what you did is you went looking around for newly issued stocks, is what I just told you to do, and you're doing it, so that's good. So yeah, it looks like this thing is from October of 24. I have no idea. Real quick, and it's relatively new. I don't even know if you can find that information on FinViz. But you want to look at the float. So you want to figure out, is it a low float, right? So is it a newly issued stock, a low float? That would be kind of your first couple main go-tos. And then you're going to want to check the regular trading hours chart. We're going to go to 30-minute. So, again, this isn't a perfect system, but we know that the uptrend on this started back here on the 30-minute, right about there. You even had one here and it failed, but you did have one here, which tells me that the most recent long date price range stock strips long position. So let me go back to an extended hours. So from the last 30-minute uptrend start, this thing has, it's definitely produced a more than a 1 to 2 risk to reward. So let's see, and if we go to previous low, well, hold up, we only want to do 10% low. So that would have been 25. It's not the best, but we'll say here, that would have been 14.8. So that thing's hit debatably a 1, yeah, almost a 1 to 5, a 1 to 6 on that last long press. And I'm imagining this is probably the 1 to 2, the first pullback. Let's see. Yeah, about 2.5, 2.7. So a lot of times what you'll see is when a long takes off on like a penny stock over the 30-minute and it has a successful operation, you'll usually get a little bit of a pullback around a 1 to 2 risk to reward scenario with the setup, because a 1 to 2's hit, right? Now, if it goes more than that, so be it. But, you know, again, that's like I said, when I'm looking at this chart, I'm looking for where's the start point of something. And so, you know, to me, when I look at this chart, I would say, oh, I just deleted it like a dummy, but I would look at ZTUP and I would say that the uptrend start, it's actually kind of in two spots, right? So it started here, right? Clearly, and then it broke up, and then you had the back test right here, which was kind of like a breakdown back test. They're never like totally perfect. I know it's not a perfect system, but that would be your two last little uptrend kind of flirts and starts right there. So when you talk about ZTUP, I would say the uptrend started on November 20th. We're now December 3rd. It had a kind of a big gap up. So anyone who is long here or long here on the last back test probably took profit in today's breakup, because why wouldn't you? Especially if you were long on the start of the uptrend back here, or if you were long on the start of the uptrend / 50 SMA back test here, right? So I'm always trying to figure out like where was the start point of something, or is there a start point to something, which is very similar to what we had done today on the VIX, right? So if we bring up the VIX chart and you think about what we just did, right? So look at that, right? I took ZTUP and I went back to the regular trading hours chart and I said, where's the 50 SMA, right? Where is the uptrend start or the downtrend start, right? And we did the same thing today on the VIX. You can see it right here, right? So the 50 SMA can be the start point of a breakout of volatility, and or just it fails the breakout or rejects it and it stays down, right? So, you know, because like that's just it. If we look at this chart and we zoom out, right, the breakover could be a start to volatility, right? So if we bring back the curtains here, right, where's the 50 SMA start point on ZTUP? It's back here, November 20th, breaks up, whatever does its run. And when I look at the VIX, it's the same thing back here on this date. We break the 15 and we run, different time frame, but 50 SMA and what have you. But so I was using the same approach today on the VIX, which was dictating, are we going to get a breakout of volatility? Is it going to fail to break out? Whatever. And ultimately, after, well, that's 15, that's 30, so 15, 30, hour and a half-ish, hour and 20 minutes, we broke down volatility. So we basically flirted with the breakout for like an hour and then failed. So yeah, those are kind of things I would look at there. It's like, well, is it uptrending? Is it downtrending? What exactly is it doing? All right, so now just for funsies, right, if we take this low, so take this low point that we just basically created on Bitcoin, now we'll run up the new one, which basically tells us that this pullback, and I know it's already really done it, but it should be coming down into like this zone right here. All right, so we've already pretty much done it, but think about everyone that bought this dip, whether the low, the middle, the absolute high, almost all of them, if you take the whole move, so if you take this whole move from top to bottom, so here to here, right, if you take this whole move within that yellow box, most people that got long probably aren't long below that box on that last dip. Not as many bought the dip, maybe some bought along the way up, but basically coming down into this 95,763 to 95,693 would effectively stop out or take out any of the short-term traders that took this move up to the long side, right? And personally, I think it's going to fail this. It might be a little bit of a bounce or something. I think it's going to fail that and come below it. But anyways, South Korea declares martial law. Interesting. Why would they do that? I don't know. I'm gonna go take a little peek at the internet, because I guess I'm not up to speed on that one. But again, let's see. I guess to be honest, I don't really care. I'd have to do some reading, but don't know enough about it currently. Needs more rocket emojis. Absolutely. Yep. Okay, cool. So that's that. What's our friend Bitcoin doing? Doing a little bouncer Magoo, nothing crazy. A little 1 minute shindig. Totally expected, but probably gonna fail. Man. Is this the start of World War III? I mean, again, I guess I'm not that big into that side of things. Again, it's always kind of hard to predict, and well, maybe not entirely, but predict and contemplate what governments with trillions of dollars in annual revenues plan to do. I mean, all I can say is if I was making trillions of dollars a year, I wouldn't want people knowing exactly what I was going to do. And I could probably make it pretty difficult for people to figure out what I was going to try to do. Maybe. I guess I could pay a bunch of people off. But anyways, yeah, so again, I just don't really try too often to get into the what exactly, government's plans are. Again, they are the biggest corporations in the world. They make the most money. It's hard to know exactly their game plans at all times. So I just sit here and put a couple random lines on a Bitcoin chart and have fun, and put some alien emojis down there. So now's probably a good time to maybe even go down and get this 5-minute trend there. So 95,612 there on Bitcoin. Wouldn't be a bad idea. Because then again, you're just going to basically run through all the 1-minute traders, right? So if we kind of snap down here, we'll stop out the 1-minute volume shelf, arguably run it down to the 5-minute volume shelf here at about 95,614. Doesn't have to work perfect, but don't fall asleep. We might find a winner. I don't know. I think so far the biggest win for the day was the recommended long support at the alien. That's good stuff. Teacher said he had no direction in life. Look at me now. Look at me now. Look at my alien emoji. Teacher, look at it now. Views 313. Nice. That's the Detroit area code. No, so yeah, I mean we were just kind of flip-flopping some time. Trying to get a trading view set up. Yeah, no, we're just kind of flip-flopping, at least, kind of spending some time on YouTube. Haven't done in a while. Just kind of seeing how the streams would operate. Kind of, again, really looks like YouTube is going to do their absolute best not to really kind of promote any of our streams. And it's okay. I mean, it's all right, I'm not the world's best trader or anything like that. I kind of you know, and there's other channels out there that have been streaming, and they deserve some viewership too. Very consistent on the net, but you know, like I said, I do it would be nice if they just took the shackles off a little bit. But anyways, yeah, so we're just streaming on YouTube for, you know, another week here, and then I'll be back in the private group working with you guys as well. But yeah, that's pretty much it there. I don't know. You know, maybe one day I'll just, I don't know. Actually, I think I'm gonna try and, I don't know. I love streaming on YouTube. I love doing this stuff for free too. I find it, I mean, I guess I just enjoy it to a degree. But you know, then one's got to ask, is it really worth sitting here for, you know, a few hours a day, especially when you know algorithms are not working in your favor at all by any means. So it's like, you know, then again, I could try some other places. I might do that too. I might just set up kind of like a one stream and broadcast everywhere. Then again, like I said, my streams never used to work. Now they do. So I might stream to some other places just for fun. I might even just set up like an afternoon stream. That way I'm still kind of live in the paid group first. And then maybe I'll come hang out on YouTube after for a little bit. Who knows? Really don't know. So again, you can kind of see how we shied the 5-minute trend here, which again is okay. Never is anything perfect, but again, you can kind of see here real quick how we shied that 5-minute trend. Now, personally, not personally, it's, you know, whether it shied or not, kind of the point being is, right, what did we just do? We went from, you know, this bounce, and now we're looking at where would the higher low creation point be? Arguably the 1-minute trend of the last low, maybe that 5-minute trend of the last low. So you can kind of see how we used volume levels to gauge where the pullback target would kind of be into that 1 minute, maybe that 5-minute, and then there's your higher low attempt, right? There was a gentleman just a little bit ago that said, like, where'd he go? Said, where's the market going, right? See, like that right there, like, it's hard for me to say where's the market going until kind of something happens, right? So it's like, right here we had the Bitcoin move down to 1-minute support. So I said, hey, we're on 1-minute trend support. So it's like, there's a bounce, right? And then once you have your bounce, like, oh, well, where's the market going? Well, here's Bitcoin market pulling back to here, right? We could kind of expect that. So there was another scenario of, you know, letting you know where the market's probably going. But you just gotta kind of wait until it arrives, right? I can't tell you where the market's gonna go until something develops, right? And now, like, even this, again, a lot of it's a repeat. So, like, even on the 1-minute scale here, like, where's the market going off this bounce? Well, the first thing that I would try to do is take it to the 1-minute trend and screw over all the last 1-minute shorts, right? So if we're going to bounce this market, I want to take and it's very small, I know, but it would be like, oh, well, let's go mess with everyone who is bearish off that last 1-minute high. So that would be where their trend's at right there, which this one doesn't really work that good because it's kind of small, but, oh, I don't want to do that. So I only know where the market's going was when something makes sense. See, and so for example too, like you see how we used 1 second. Let's actually delete a couple of these things. Now, again, the more I show you guys all of this, the less likely it is to continue working. Usually you're gonna, the systems will kind of change a little bit because, you know, when you basically publicly show people how to, you know, predict markets and all these things, then eventually it just kind of stops working to a degree. So, or you got to think another step ahead to a degree. But so here is, so you see how we took this last rally and then used the low of it to predict the next little bottom cycle up. so basically we're taking something that happened in the market and the information from it, figuring out where a lot of people might stop out or be put on edge, and then using that. So we're looking at this low to basically create this low. And now after that low's created, someone who uses a trend line is going to come in and go, okay, so we stopped here and then we had this move up, and so now I got my trend line like that. And so they're going to do something like that. So a lot of our strategy here that we're using basically creates the low that then someone who draws trend lines will then use. You see what I'm saying? So, we're not necessarily drawing a trend line and then going, oh, we're going to bounce this trend line in the future. That's not it. So you can even see if we took this trend line, matched up with relatively the bottom of this dip, someone would then maybe think that this is support. Meanwhile, the whole time we were looking at this green line for the next dip. Sorry, let me add this real quick. Right, so they might be looking at the trend line, and I'm looking over here on this green BWAP, right? So now their trend lines go, oh, well, now maybe it's this, right? And so they might be looking at, like this trend line right here. And you see what I'm saying? So again, a lot of that stuff doesn't quite work. So yeah, we'll be using volume levels to track people's participation in the market. Use that for future moves. Hopefully that helps. Also, the market's going up. Remember, we told you the short's probably going to stop working. The market's probably going to bounce. The market's probably going to go up, right? That's because you can see the VIX volatility index has entered a downtrend. Well, it's already been in a downtrend. It just failed to break out today. Remember where the breakout was? The breakout was over this yellow line at 1361. So we pulled the market back today, broke out the 15-minute, tried to break it out, failed, and then re-broke down. And then the 15-minute volatility index stays into a downtrend. And as a result, you've seen your market get boosted up from the bottom. And where is it at? Ironically, into our target. Even though that probably is a little bit different now, but let's see. Oh, no, what do you know? Perfect, doink. It did change a little bit. Let me update it. Should be about there to right here. So, yeah. So basically, look at that. That target has been on the screen. Not that it could have very well not hit today and all this, right? But that target's been on the screen since beginning of the day. And that means that's a little bit of a resistance spot, just an FYI, guys. So do be mindful. You might get a little bit of resistance here. It's also 11:32, so that means that's a new 30-minute candle. Again, I wouldn't expect there to be major resistance, but you never know. Also, kind of late because it's already... Anyways, back to what I was saying. Is this target started all the way up here? And as the market sold down and we had to readjust our levels, we're now right here. So again, you're supposed to be careful because that's a back test of a resistance level. In its first attempt, first true tag of the day. So just to be mindful, that just tells us that, this long that's gotten taken from here back to target, right? I mean, arguably, maybe we could. Again, I figure most people want to see Brandon in that regard because he does, the live trading aspect of it. And that's because he is by far one of the most consistent traders I've ever seen in my entire life. Far more consistent than I have ever been. And so it's as far as the paid side of it, it's you kind of want someone like that running, the live portion of it. Vice versa. to me, I kind of have my own maybe spin of analysis and the ways that I like to kind of predict movements in the market. So just over the years, I mean, I'm just basically become better at analyzing and seeing what can happen in a market versus trading it perfect all the time, which is one of the most ironic things ever. Kind of the story goes, the more you know, sometimes, the worse it can be at times. But yeah, as far as consistency goes, he's one of the most consistent traders I've seen in pretty much ever. So that's kind of why he runs the more of the live trading side of things in our paid stream, and then I kind of take more of the backseat and run all the analysis in the background for you guys as well. Yeah, so but then again, this is, if you guys would sit, and some of you probably have for a long time. I'm not saying you haven't, but if you sit and watch markets all day every day for a long, long time, you'll develop this kind of eye for a market, right? So it just kind of I don't want to say it naturally comes. It does not naturally come. You have to basically work your ass off to know that markets can move like this and read all these things in real time. Again, there's your resistance at the target, and all I can say is it's just the market's gone up to one of our expected counter retrace targets, and over under resistance points based off the pre-market from this morning at 8:50 in the morning. So since 8:50 in the morning, that's the level this whole zone, this little did I delete that? No. That little bullseye, that's all been derived from the 8:30 a.m. candle. And we've been watching it this whole morning, and it just now live tagged. So it's not like this has been in development since this morning pre-market. We've effectively been tracking everyone from pre-market this whole time, and we just hit that key level right now, which is a resistance. It tells us that it just is resistance until it's not, right? So all we're seeing right now is the market went down, and now we're just lower highing the 30-minute chart, and that's it. And as long as the market maintains below, again, that bullseye, the pre-market move to the downside is still intact. It's simply just a back test and continuation of trend until it tells us that's not the case. So yeah, I hope you don't take it, somewhat too personal there, but it's just how we thought it would be the best way to operate the trading room currently. Just having someone who's far more consistent in the trading space, operating the live trading aspect of it. So that's just kind of the way we saw it, or thought it made sense to operate it, and so on and so forth. But by gosh, I mean, come on, guys. Is this why they only allow our stream to maybe get 25 people? Because they don't want to stream with 6,000 people trying to top tick the market like that, maybe. Or I don't know. I do believe the information that we provide you is extremely valuable, so much so that they just don't want us to have an extremely popular stream, in the sense that they don't want someone like me coming on and telling 6,000 people that, hey, this is a buyable dip on Bitcoin right here, and then it just launching up $3,000 in a second. I don't know. I have no idea. Maybe that's giving myself too much credit, probably, but interesting nonetheless. I mean, just like that. I mean, either we're just dumb lucky, or we might just be slightly smart enough. Again, is there any books I recommend? Honestly, no. Not really. I did most of my learning by just going into a chart, seeing how it worked, backtesting ideas, and winning some money, losing some money, breaking a couple computer screens. Just kidding, but that's pretty much it. I don't know. I would say just literally practice, play around with the chart, see things that work, and that's about it. So again, yep, there's your back test rejection. Pretty straightforward. I mean, it's pretty straightforward because it's pretty much the same strategy that we'll use a lot of like every day. If it stops working, then that's okay. It'll probably come back in action at some point at a later date and start working. But it's fine because, again, there's so many different strategies that we'll use on any given day to kind of pinpoint how a market should move, that even if something's not working entirely accurate, I mean, we have SMA systems, Fibonacci systems, 30-minute volume weighted average price systems, daily, weekly, 1 minutes, 5 minutes, standard deviation approaches, buy and sell signal, VWAP approaches, algorithm candle approaches. I mean, there's just so many different things that we could look at on a day-to-day basis that even if one of the things falls off, it's not really like it's the end of the world, because it could just bounce around from any one of those approaches at any time, really, I guess. And when I say approaches, it's really just how the market moves. It's not like my approach, your approach, or it's just the way the market moves and kind of figuring out things that kind of work around that. And then trading alongside of it is going to be mainly your hardest thing. So, okay, yeah. So remember, basically, hey, guys. Well, that's just dumb. I don't even care about that. So, yeah, now we're going to be looking at, like, the 15-minute chart here. So, like, this is the next level of Bitcoin, this 15-minute chart right about there. Okay, so basically we just came into about 15-minute trend support there on Bitcoin. So we can clearly see like a double top's been put in, right? So like a little bit of a double top, lower high has been put in. But this is coming into 15-minute trend support. So arguably we'll get like a little bit of a counter bounce here off the 15-minute on Bitcoin. It doesn't have to happen that way. I would say the next kind of bigger, I kind of expected the 1s, the 5s, and like maybe the 15-minute would fail any sort of high or low attempt. You can see like we've clearly bounced them, but it's not what's gonna just like keep this market going, in my opinion. So it's really my expectation that we're gonna be coming down to this 30-minute too. So I do expect that we're gonna see Bitcoin roll over some more here in the micro, and we're gonna go down to 95,000 pretty much next, just because. It just makes perfect sense to me. So I think we'll at least see this 95,000, probably lower than that, but I would imagine if we don't just fall apart, we'll get a little bit of support in this area on the 30-minute, might hold it up for a little bit, but once that gives out, we should be back down somewhere into that area. Dude, why was there resistance at the target? I just don't understand. All right, what's next? I don't know. We'll probably go up here, and we'll probably do, well, I mean, it's just debatable, but we'll probably do a little bit of a counter long back test on the market, unless it just dies out, which it could totally do, but let's see. I would say here, then failed here. We're going to have to zone this one out. There's been a lot of failure points, but yeah, so again, you're probably
Probably somewhere like it again. This is kind of has this like kind of free fall kind of feeling right now. It's kind of, but and the way they're moving the 1 minute candles, a lot of times they'll be kind of jerks on the back test. But so this is already kind of feeling like a situation where the market doesn't back test very easily. It's kind of do these kind of false back tests that then get sold back down. But we'll see. All right, so basically now, if we continue falling out, we should go down to here. I think I feel like the market's going to go get 602.09 now, but that might be speaking that a little too soon. It could be. Let's double check. Well, we are below. Okay, so yeah, maybe it might be a little too soon for that. We'll see, because you do have a nice bounce here. We'll see. Yeah, but I mean, even that, I was going to say, it's common to get a back test. So right now, the back test zone on the SPY is going to be back up to like 602.80s to 602.90s. Sometimes they'll prevent it from doing the full back test by doing these like little stupid lower highs on the 1 minute. That could be a situation. If we end up seeing it, I'll show you why. But for the moment, yeah, we'll just, and I can already see it's kind of happening, but again, whatever. Hello, CFGH. I have nothing about it, but it's 10 cents. How long has it been in operation? Not too long, but yeah, so this has been in operation since 2007. It's never really gone through a significant pump, but it's definitely got some people that have been holding for a while. Based off the way that it's moving, you're definitely late. Because I would say this, you broke out the monthly uptrend. So the monthly uptrend started back at about 6 cents. So the monthly got positive back at the yellow line. The weekly chart turned positive at this yellow line. The daily chart kind of flirted a bit, so we'll just work off the monthly and the weekly. So if we look at the monthly and the weekly, all right, those turn into an uptrend like basically right here. Well, yeah, I mean, yeah, they did. But anyways, you get the point. So it's actually started back here and then back test, but anyways. So we basically have a monthly uptrend, daily or weekly, monthly uptrend kind of starting in this area. I mean, you're not really early on that. And it's a low liquidity stock. I mean, again, I don't know anything else about it other than just looking at a couple of those things like that right there. Meta. So Meta right now is in an uptrend. It's been in an uptrend since November 25th. So November 25th was the day that it got positive over the 50 SMA and was able to sustain it with a back test and a long. So, and arguably, we could be looking at a 423 extension right now. Hold on. No, not quite that much. So, we've gotten the golden pocket 161, not quite a 261. That's another way that I'll like to do sometimes some Fibonacci, which is basically take the high-low of a buy move. So you can see how we got long over the 50 SMA. So that's an uptrend start on the 30-minute over the 50 SMA, etc. Swing the high-low of it. And there's your golden pocket back test with the 50 SMA, 100 fib, 161, over 161, leading 261. So my take on Meta is that you are late in the sense of the long operation that started on November 25th. Now, you could have, now look at all this other stuff in here too. It's like, just like on this day, like you had a pop over that failed, pop over that pulled back, pushed, then failed, right? A pop over that led to a small long, then failed, right? A pop, fail, pop, you know what I'm saying? So it's not necessarily a perfect system. It's just, you just know that it's the shift point of a stock. So whether it plays nice or it doesn't is another story. But whether it plays nice or it doesn't, it is in fact the start point of a bullish bearish trend attempt / change, right? Just like up here, right? So it was bullish, flirting around, fails, breakdown, back test, dump, right? So you can get long when the market is below the 50 SMA. You just run the risk of it being in a bear market, right? You can get short with the market being over the 50 SMA, but you run the risk of the buy signal having follow through, and then you get crushed. So it's just always better to try to operate in the direction of the buying operation or the selling operation, regardless of how short or how long it may or may not last. Is it bad to trade if you're 13? I mean, yeah, because I think it's bad. Well, that would be illegal. So. And I mean, again, the reality is most people are going to lose money trading. I mean, I've made tons of money and then lost tons of money trading. I mean, again, it's not a, I mean, it's a very, very challenging business, you know, and again, most people are just going to be better off just buying and holding like an index, right, or something like that. If you find yourself intrigued by the trading world enough so that you're going to pursue it, you know, in some degree of, you know, of importance, then, you know, then you're gonna, you know, start paper trading, and you need to be 18 to open an account anyways, so you're supposed to be at least. So again, very, very challenging business. Again, the likelihood you find success for a long period of time is going to be very challenging. But if you do, it's going to be one of the greatest things of your life. But yeah, that's pretty much it. So yeah, I mean, and again, you can paper trade as long as you want. That's a great idea. And even still, even with paper trading or practice trading, or even learning the technical analysis behind why markets move will make you, it should make you a better, and I don't want to say it should, but it very well is going to lead you into just being a better investor in general. So whether or not you actually want to trade or end up taking up trading at some point, or really, really going at it, the things that you learn should trickle over into investing alone, and you should be able to better manage your own money in that regard, meaning that when the market, you know, when everyone's panicking and the market's going down and blah, 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 you know, like I can see in the back of my mind, like next time the market crashes and everybody goes crazy, I'll just be sitting there waiting, and if we hit a -3, -4 standard deviation, I'll be loading up the market because the probabilities are in my favor. So once it hits -3, -4, I would just load it up, and then that would probably be early to the reversal. So I'd be buying a reversal strategy in long-term portfolios. And then as the +3, +4 bounces,
will then be attacking the 30-minute trend. Once that flips positive after a big sell-off, then it would make more sense to even add more onto it because there'd be more confirmation. So you can learn ways to better average long-term portfolios and dips, better time and entry for a stock that you really like, all of these things, right? So those are all even outside of the trading aspects. There's a lot of stuff that you can learn from trading that will trickle over even to some long-term portfolio approach stuff, which, so, you know, just depends on how, I guess, how you look at it. CRWD. CRWD is currently bearish, in more of a, let me say, it's in a bearish environment. So you should only be long bias if you're trying to trade a reversal strategy. You should only be long bias right now if you're thinking the market's going to reverse. If you're not thinking the market's going to reverse, then you should wait to be long bias when the market gives you an attempt of confirmation over the 50 SMA, which is currently at the price of 351. If you run a Fibonacci of the last leg, it would probably be like here to here, and then that would be that. So it's kind of a very similar scenario to that of, what was it, Meta? Just backwards, right? So if you look at Meta, so let me run this fib real quick. Okay, so, oh, snap. 1 second. So if you look at this fib with Meta, right? So is it Meta back testing the 38.2, the golden pocket, that makes it work? Or is it just the fact that Meta got bullish over the 50 SMA, back tested the 50 SMA, confirmed the uptrend, and just went into an uptrend? And then hindsight, as you throw a Fibonacci on it, you go, oh, see, look, it retraced the 50%. So is it's retracing the 50%? Is it's just back testing the uptrend, etc.? And then when you go to something like CRWD, again, you see a very similar scenario where you have a fib and it's high-low and blah, 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 blah. And so, and I did them slightly differently, but ultimately you can see you have the back test of the 61% retrace of the fib. So is it the back test of the 61% retracement, or is it merely just the market went into a downtrend and now we're back testing the 50 SMA to see if it wants to stay into a downtrend? Right. So for me, a lot of it's derived around the 50 SMA. And then you can just kind of throw a Fibonacci sequence on there for sequence of event levels, right? So again, a Fibonacci sequence isn't necessarily trend, right? Fibonacci sequence is if, you know, X continues in direction, what would be the extension of this leg? And it would be 317. So do we go get 317? In order to do that, the market has to stay into a downtrend. It cannot recover the 50 SMA, right? You see what I'm saying? Because then you'd be uptrending, which is against the extension direction. So again, there's direction, or sorry, there's trend, there's reversal strategies, there's extension strategies. So again, a lot of people will just kind of mix up what they're trying to do and not, you know, maybe have an idea of where something isn't working. You have to know you're on the wrong side of something. Kind of like back here. So like, we could have taken this sell move, ready? So we could have taken this sell move and been like, oh, you know, I see like the market's in a sell move, so we're just going to take that approach that I just said, ready? So watch this. So we're going to do like that. And the reason we're doing it like that is because, again, oh, it's not even accurate. 1 second, like this. There we go. We're going to say, again, so the market was upsided, and then right here, it went bearish, right? So it went bearish below there. So we're going to flip a fib down. And we know that if we get continuation to the downside, you know, maybe we're able to go down here and get this 281.71, right? So we would say like, oh, you know, as long as the market stays in a downtrend, right? So it means it can't get over the 50 SMA. So it comes to the 50 SMA, back test, moves away, cannot get below the 100 fib. So basically bottoms, right? And then what? Then it gets over the 50 SMA. Right there would be my saying, okay, we're no longer bearish. We have to watch more on the long side because we're getting over the trend. So regardless of what this fib says, and maybe we're going to, trend's going up now. So I would flip to the upside there, regardless of the fib being intact or not intact. And then, yeah, there's another strategy called the inverse Fibonacci system, which would be like this to this. And then that would, you know, but that's just getting crazy with it. You guys don't need to know all that. So yeah, ultimately you'd be more on the bear side of the whatever for now, CRWD. So again, you know, you can run a fib 6 different ways a Sunday. Doesn't mean it's gonna work, right? You know, and so for me, it's mainly about being on the side of the trend. And actually, I should. Let's see. So like right now, this is the current fib for what we're doing. Right about there. Would it be this? I mean, it's debatable, but it should be right here to here. Or well, it is kind of debatable. Sometimes it's not always like a perfect, straightforward answer on how we're gonna do it, but like I would say like right there and here would be, excuse me, the current fib system. All right, so basically from our last buy signal, this would have been the Fibonacci system I would be looking at, which would just basically be we're in a long, and this is the 100 fib, and this would be our first target on the long right there. All right, so I'll just put on one for now, but it would be this guy here. So that would basically be the Fibonacci that I would currently be watching on the upside, right? So that tells us, you know, we've hit the 161, the 261s all the way up here, et cetera, et cetera, et cetera. So as long as the market just never goes into a selling move and just keeps going up, then the next target would be 61137, something like that. All right, getting back into the chart here with what's it called? So I know that I wasn't really looking, but you can see that we clearly hit, what do we hit? The back test target. So you guys see that? See how we talked about, hey, we're going to have probably a long scalp back to target. So there was your long scalp back given to you ahead of time. Foresight analysis, thumbs up, cheers. So yeah, so again, I mean, it's just pretty straightforward. You see this leg up here? So we're looking at the 1 minute chart. So again, everyone who shorted this leg. So most people had no idea they should be short at this top. Like we mentioned, you should be bearish here, not long bias. So most people aren't paying attention there. So they're not short there, right? Most people, again, if we're taking this whole move down, if they're being bearish, most people's average price is somewhere here. Hence why we push it back to here, right? If most people that try to short this leg have an average price of here, then we're going to move the price there. And then maybe we'll create a lower high, right? So all of these little highs in here get taken out on the correction move, and then maybe we'll actually do a true lower high, right? That is how the market like to work. And speaking of, let's see. We haven't gotten the 5 minute level, so this is arguably going to be our next target up right there. So once we take out the 1 minutes, we should boost up into the 5 minute. So if I take this back down to a 1 minute, Again, this is our 1 minute trend right here. So right now the 1 minute micro trend is kind of doing its thing. If we successfully break that out and don't lower high, and what I mean by don't lower high is we've kind of already tried it, right? So we sold down, we counter longed, then the short at the 1 minute trend came in, was unable to go to a new low, it created a higher low. So if the higher low has follow through and breaks up, we're most likely going to go track down about 602.95 right here. Okay? So keep that in mind. And then this little dip here, you know where that came from? Most likely the volume weighted average price of the bottom. So if I add this now to the low, just like we were looking at the top side, so we go low, right? Boom, there you go. All right, so the same way we use the top here to figure out where the counter long retrace would be is the same thing we did off this low to figure out where the pullback counter would be to potential higher low. But don't tune into the streams. It's not valuable. You don't want to know this. This is all terrible information. So what we're getting right now on the SPY is we're getting this little battle between the 1 minute structures from the short off the top and the bottom off the low. And now the volume of each of those markets is now compressed between this zone from this last little high to low. Okay? So it's really kind of like a wedge situation now, where you have volume off the bottom that came in, volume off the top that came in, and now it's between these two parties to basically, one of them has to lose to create the new leg, whether it be up or down. Okay? Now, from here, you would just basically start reading market internals. So you're like, well, if is it going to go up? Is it going to go down? And blah, 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 blah. You just basically start looking at your market internals and trying to get a gauge, right? So when we start looking at the market internals, what do we see? Pretty much everything's just straight shit. So you're not really getting much of a gauge here, right? I would look at the FANG. I would say at the FANG, keep rolling down, then we'll get the breakdown. But we're so far into the day now that it's hard to get the best read on momentum with these things because there's just not as much momentum, right? So unless you're getting clear direction off one of these, it's kind of like meh. Next would be the VIX. And the VIX, I don't even know what this thing's doing. It doesn't look like it's doing much. VIX 5 minutes bearish. I would probably have to stay more on the downside than anything for the moment, but I'll probably be proven wrong. We'll see. All right, moving over to the old shitcoin. Oh, no. What is Bitcoin doing? Why did Bitcoin sell down to the 30-minute target that we all told you it would sell down to? What market maker is on this stream manipulating prices as we say it? I don't understand. So again, this is that 30-minute level, 95.02, something we talked about would probably come down to. So the next up's going to be the 1 hour. So if for whatever reason we don't find any support catches around this 30-minute, then we expect the trend to continue. Next kind of level we're going to look down towards is going to be the 1 hour. 1 hour is going to be here at about 94,717. It's 12:07, so a new 30-minute candle just started. So yeah, again, this is where we're kind of getting to the spot where I think we do got a little bit of a macro, maybe a little bit of a bounce. I mean, we kind of already had when we came into the 30-minute, bounced it again. But anyways, so this is kind of that next zone in the micro slash mac. Yeah, micro, short term. Let's go back to the SPY. I'm just kind of having fun at this point because, what else am I really going to do? It's freaking snow on the ground. I should just go golf. I should just go play golf today. I should do that. My wife does want me to cook some chili, which I will definitely do, but after golf. Yeah. Yeah. So does that make sense on how we're trapping the market, the micro scale market? Does that all make sense to you guys? Is that good? Oh, I could get I could go get some more coffee. Our stream is the stream. We're the mentors of the mentors. That's what we do here. We mentor your mentors. All right, so you kind of see, I mean, you guys can see. I mean, you're probably looking at your own screen for gosh sake. But again, it's pretty straightforward, right? You can see how we're trapping the volume. We have it between the top down and the bottom up. Again, I can't control markets perfectly by any means, but that's what the micro scale is doing. They're trapping the environment. And if you're someone who likes patterns, right? So look at this, ready? So take away everything on the screen for a second. We'll just take off this guy and this guy, ready? Watch this. So we know that there's somebody out there doing this. They're going, okay, so we got this bottom, and I'm going to draw this trend line like this, and then because we got a low here, so I'm going to draw the trend line like that, and then there's kind of a top, so I'm going to draw like, okay, so we got like a little bit of a wedge. It's like a flag. It's like a wedge flag. Meanwhile, we're sitting here and being the ones that are creating that wedge flag. So what they're seeing a pattern of and starting to kind of draw trend lines around, we're using the previous moves in the market to identify where we're going to use these levels to create such pattern in the first place. So we use the previous top of the leg to kind of create the lower high, and then we use the previous market bottom to create the uptrend. Afterwards, now someone can then start drawing their trend lines around what we've already been doing. Okay? So we're not necessarily always waiting for someone or waiting for like a pattern, right? We're trying to figure out where's the key level to hold support. And then as a result, hindsight 2020, what do you see? You see kind of a wedge, flag, whatever the hell that is, right? And now we also know that if we do successfully break this wedge and this flag out to the upside, the risk is most likely, like we said a little bit ago, to like this little guy right there. That bullseye on the upside, that's where if these 1 minute micro traders in this 1 minute system fails and breaks out, the first go-to is going to be into like 602.95, which again, if you look at the price of the chart, it's not much. I mean, this is 602.83, so that's only like 10 cents, right? It's nothing crazy, but that's just the way the market's currently set up, right? That's just the way the market is currently kind of positioning itself. You know, and the other thing too is like if you drew this wedge here and you're like, oh, well, it broke out of the wedge, right? It's breaking the trend line. So then you basically get long into this candle, which is still below the 1 minute trend, and then you just get beat down off the 1 minute trend again, right? So that's tough, you know. Oh, by the way, forgot to mention. Ready? Watch this. Ready? You see where these dips are? See where these dips are kind of at? Like right here? Watch this. Okay, so we add the next 1 minute volume weighted average price on the previous low, and you can see where the support's at. So that's currently why we're kind of holding these little bottoms in here, is because it's the stop out, the low of that 1 minute trend support, right? So that's why we're kind of holding right here. So now you can kind of see how we're creating this little mini flag in between, right here, off the trend support. Let's just double check, make sure our levels are still accurate. Yeah, they're there. That's good. It's really about right there. All right, on that note, I will be right back. I'm going to go get a fresh coffee. Fresh coffee. Oh, hello. Sorry, I forgot to unmute my mic there for a second. Oh, but yeah, anyways, you can pretty much see we just went up. Pretty much got target there. It's actually a little bit lower. Not quite, but, you know, it's a hair lower than what it was. There we go. All right, so again, there's that 5-minute long target that we just achieved right there. Bullseye. Ding, 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 ding. Ding, ding, ding. Ding, ding. Ding, 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 ding. So, cheers. Thumbs up. Again, I know it was only like 10 cents, but there was that 5-minute long target. And again, it's not that it couldn't go higher or things like that. We're just simply looking at the market participation from the last leg in the sell move and trying to figure out where we would basically be screwing people over. So again, by coming up to this bullseye here, we've effectively screwed over the 5-minute selling market there. And the main objective of the market is to basically screw everyone over as much as possible. So that's effectively what we just did, is we took this last sell move, screwed over the 1 minutes, and now we put all the 5-minute volume levels on tilt. Oh, my neck. Man, serious issues. So again, I could go on to what's next, but just probably... well, we got to wait. We got 1 minute left. So in the next minute, the market's going to decide if it wants to use this 5-minute as a resistance or not. So kind of coming into this next minute or so would be, the best way I can explain is if the 5-minute was going to hold resistance here, it's going to be on the next 5-minute candle. So you see how the 5-minute candle has opened up above. So now this means the 5-minute wants to sell down to 602.96, arguably back test it, hold it as support, and then squeeze people out. So right now the 5-minute over under is now 602.96. Since we opened up above it, that's not as good for people who are bearish, but market can still do whatever it wants. So yeah, I mean that's pretty much it, And we probably got the upper distribution on the 1 minute. Let's see. Yep. So another thing too is you see how we took out the sell move from the top down, squeezed out the 1 minute, taking them to the upper distribution. So now the 1 minute traders are pretty much fully blown out. And maybe what's next would be the Anyways, I'm just getting into the weeds of it. Don't even need to do that, but probably going to be a good ending point. Again, there's our bounce there on the 30-minute scale, kind of coming into the hourly, not quite, but again, you have your 30-minute. Oh wait, yeah. What am I talking about? It's down here. My bad. I messed that up. I didn't adjust my levels when I needed to. But yeah, that's our 30-minute sell target support bounce. So that's happened. It's pretty straightforward. Yeah, it's probably a good place to end it. I think we've done enough calls, enough analysis, enough pretty much, foresight analysis for the day. I know foresight analysis isn't supposed to be possible, but we did it today. So cheers to that. And yeah, I'll let you guys go for the day. You guys have a good rest of your day, and I will catch you guys back tomorrow. I'll be streaming on YouTube for about another week afterwards. I'll be back in our private group, which, again, there's a link in the description below. If you'd like to join us, again, my business partner runs the live trading stuff, and I'll just provide the analysis same way that I'm doing here. So if you guys find it useful, think it's going to help you guys navigate your trading, feel free. If not, then I guess we'll just see you on YouTube videos every once in a while. Guys, take care, and I'll catch you in the next one.